All right, how's it going, everybody? New year, new me, but not really, because gingers are not technically capable of change. So here's a new format of the CEO barbecue instead. Call it I don't know, Friday night grill only. This is Saturday, so it doesn't really make sense. Don't ask me to explain stuff. I'm not good at that. First week has that we're doing right now has two silver stocks in it. One of them is a $50 million market cap. The other one is a $15 million market cap. One of them has projects in Mexico. The other one has its projects in Peru. I also have a uranium company that's going to be at the end because it's a large company, one of the bigger boys out there. And then I have a graphite stock. That's a sector that gets little attention and maybe for good reasons too. I suppose we'll find out. Both ways, does that mean that every week you should just come in here, blindly go ahead and buy every stock you see on this show? Yes, actually, it means exactly that. Well, at least if your 2024 goals were to lose all of your money, then you should just go ahead and just buy every junior stock you ever see on the internet. Maybe go on Twitter and just have a portfolio of 170 stocks. The mining and exploration space is among the highest risk subsets of the market to deploy capital in, without jokes aside. And if someone tells you that it's easy to get a 10x, they're lying to you. And I would know, because I still haven't managed to make any money in it. But hey, it's just not easy, and it doesn't happen all that often that people make money in it, especially not the 10x's that people tell you about. Failure is not only the norm here, but it should be your expectation as well. Again, few people ever manage to make a lot of money in the sector, and the ones that there's really only two types of people who ever do. Either people born under a lucky star, who are the hit the lottery type of guy or gal, and the other type are people who do extensive research before taking a position and understand the company and everything else around and about it. If your goal is to get lucky, well, good luck, I suppose. I haven't met many of those. I don't know how they do it. If you know, tell me, but I don't. So my suggestion would be to take everything and anything you hear in here with a grain of salt. Head over to setterplus.ca, which is where you'll find the company's official filings. This is not my website or anything. It's a government website. And so go ahead over there, take the MD&A, do more research, and when you think you've done your research, you're not. You have to do more research. On top of that, this beer doesn't dance for free, so some of the companies in these interviews might be paying for the production and distribution of them. And although no questions are shared up front and the companies get no say in what I ask or talk about, you should still consider everything you hear in these videos biased. And you should consult an independent, licensed financial advisor, which is not me, before, of course, taking your own decision in the end. That'll set I'm kicking it off with Peter Dembicki, President and CEO of Tier 1 Silver. As the name suggests, this is a silver exploration company with two assets in Peru. The company is listed on the TSX-V under the ticket symbol TSLV, where an average of about 170,000 shares trade each day with a 52-week high of 30 cents and a 52-week low of about 6 cents. With a market cap of about 16 million Canadian dollars and about 160 million shares outstanding, today this is a 10-cent stock. There are 25 million warrants and about 7 million options are still outstanding, resulting in about 192 million fully diluted shares. Tier 1 says it has about 14,000 shareholders around the globe, one of which is Newmont, which owns 8.8% of this company after the spin out, I assume. As of the end of September this year, the company had a little over $500,000 in cash, as well as a little over $500,000 in account payables, for a total value of the current assets on September 30th, again, of around $1.2 million. That sat on the balance sheet against about $1 million in current liabilities, and this is about halfway split between account payables and a provision for site reclamation. Although the working capital might be a little bit different by the time people are listening to this, because Tier 1 recently closed an almost $1 million financing. Now, the company spent about $4.5 million during the first 9 months of the year, with the biggest portion of that being about $1.5 million of exploration expenditures. A little over $1.1 million went on salaries, and $650,000 was spent on marketing, and almost $500,000 was recorded on as an impairment of one of their properties. With the rest being split in whatever is on your screen right now, I'll probably have the financials up there. To my calculations, that's resulting in a G&A of roughly $250,000 a month over the first 9 months of last year, at least. But boring stuff to the side. Tier 1 again has two silver projects in Peru, southern Peru to be specific, not too far away from the Chilean border, which might already be sort of waking you up, telling you that this is actually located on a copper porphyry belt, because it's one of the more famous ones in the Ring of Fire. As this is the mother of Cerro Verde and also Quellaveco, if I'm not mistaken, a couple of others, two big ones in the area. So how come silver here, right? That's the main question. I suppose that's what Peter and I are going to be talking about further on, because this is the first time an epithermal intermediate sulfidation system has been identified on this belt as a whole. So it's interesting whatever's happening. One of the projects, the one that's closest to the border, is called the Corisor project. Not much is happening right there. It is early stage. Not much has happened on there over the last couple of years. But this is believed to be the same type of mineralization as their other asset, which is the flagship asset. It's called the Curibaya project. It's again, it's close to Corisur, so it's close to the border of Chile, southern Peru, and it covers about 17,000 hectares of land. Typical for precious metals epithermal systems, initial drilling, which was, by the way, almost 3 years ago, has returned high grade but narrow intercepts of silver mixed with some gold in there as well. There was about a 30% success rate in finding mineralization, so about 30% of those drill holes came up with mineralization. Again, haven't drilled it since due to market conditions, but most recent exploration in 2023, which again consisted mostly of turning rocks, if you will, has identified new zones within a total of 7 mineralized corridors. And in total, after a chip sampling and a channel sampling program, Tier 1 has now identified 20 drill targets on the Curibaya project. And again, drilling will depend on the ability to raise capital in the market, of course, a little bit too. Which is what I hope to be talking about later on in the conversation. But for that to happen, I suppose I'll probably have to cut the cackle, if you will, and ask Peter what makes him special. Because, Pete, none of the majors in the region found the epithermal intermediate sulfidation here, and I cannot figure out why. So talk to me about that. I mean, Curibaya is large, and if it is as good as you hope it to be, how did you buy it for pennies? Why didn't anybody else pick it up before you?
Yeah, thanks, Antonio. Great to be here. So a really great story on how this project came to be. 5 years ago, as a part of our parent company at the time, Orin Resources, we sent our technical team out to scour the entire coastline of Peru, southern Peru. Now, we stick to the coastline in Peru because the moment you go 100 kilometers or more inland, it gets a little bit sticky with indigenous groups, tougher on communities, and really, this day and age, it's about time to drill. So how long is it going to take you to get out the drill bit and actually become active? And when you have multiple communities that you have to deal with, that can take time. However, this one being right on the coastline, as our geologists say, ocean view, at low elevation, 1,500 meters to 2,500 meters, it ranges throughout our property. It really is a special place. And so when we sent out our technical team to scour the coastline, using stream sediment techniques, blagging techniques, they came with this target at Curibaya being the #1 precious metals target, which was, of course, as you mentioned, pretty ironic that it landed us not on the traditional epithermal belt, but on this prolific copper porphyry belt, just to the north of us, not even 100 kilometers away, is Cerro Verde, Tocopala, Quellaveco, and Kootenay. These are some of the largest open pit copper mines and silver as a byproduct producers in the world. And there's a gap in the system where Curibaya exists, and geologists and management for years have been looking over this area right at the southern part of Peru, looking for that next big copper porphyry target, but never really found it from any kind of surface evidence. And then these big giants start up again in northern Chile. So that trend that continues down along the coastline. And so for us to come up with a precious metals target was really intriguing. And when we set out, we acquired a third of that 17,000 hectares, 100% owned, that wasn't staked at the time. Now, the other 2/3 that we really wanted to bring this property together as a whole, one was owned by Teck at the time, and one was owned by an Australian junior company that was doing some light exploration work in the area as well. So when base metals were down, Teck was shedding land, and we picked up their third at minimal cost. We really wanted to bring that last third together with the Australian junior. They would not do a deal with us. And so we waited, and eventually the Australian junior went bankrupt and turned into a hearing aid company. And only months later did the CFO reach out to our chairman and say, we're a hearing aid company in Australia. We have this piece of land in Peru. You guys are our neighbors. Do you want it? And so were able to negotiate on very good terms to acquire that last third and really bring the three parts together. So that's how the project came together, and that's how it's 100% owned. Now, since we've done our initial kind of, let's call it discovery work, the majors have been back in a huge way. As you can see on our map, all the names that you know and recognize in the world and in Southern Peru that are active have been very aggressive in staking in and around us, including Tech and Vale and Anglo. So that's how the property came to be in our portfolio. It was early stage, of course. There had been no historical drilling on this property whatsoever. So it was really just kind of, let's see what we got here when we launched this program.
But so that's exactly what I'm asking, because they are staking in the region. So how come then the majors, especially knowing that they're Aussie themselves, why wouldn't they go to the hearing aid company in Australia and ask them, hey, can we have this piece of ground?
Yeah, interesting. I mean, I wish I was in the room for those discussions. All I know is that what we got it for a good discount. But the majors, why weren't they looking for this? Why didn't they notice? Well, this is copper country. If you go east or I guess southeast on our property, you run into the more traditional silver producers and gold producers. But no one's been looking for precious metals in this area. It's been strictly copper kind of country. And so for us to really concentrate on the epithermal system was intriguing, a little bit different. But since then, it's turned out to be quite an asset that we're quite proud of, and we're really intrigued to see what the next kind of phase of drilling will bring.
Right, and well, that's exactly what we're going to be talking about. But you're basically working with two geological theses, as far as I understand it. You're looking for the arms of a porphyry, which would be typical for that region, as well as you're looking for that epithermal sulfidation vein system, if I understand it correctly. And that strategy is quite different than what the company was working with prior to the corporate stuff, basically, so to call them. So yeah, another multifolded question, I suppose. But why did the thesis change, and what's really the priority thesis of the two that I mentioned?
Yeah, you caught us. I mean, when we first launched Tier 1, we were actually called Tier 1 Metals. But at the time of the company going through its listing process and getting listed on the venture exchange, we came back with these just phenomenal silver grades and gold grades. And so, your viewers and yourself, the power of silver. And when we were going through our listing process, silver was $30 an ounce. Interest rates were close to zero. Companies were literally changing their name from ABC Gold Corp to ABC Gold and Silver just to grab that wave. We know that every time gold goes in a bull market, goes on a run, silver surpasses gold almost every single time by a very, very large amount percentage-wise. It may be short-lived in history, but it has that quirky nature, that power. This is what drives silver investors to these stories. So we said, you know what, let's grab a hold of what we have and make the name change to Tier 1 Silver and see what these silver grades are all about and find the source of it. So that's kind of how we kind of came to market, grabbing a hold of this. Now, after our first pass of exploration, as you mentioned, I think it was actually 40% of our holes were of economic mineralization. Tough to put the economic name around it just because we are only a first pass of drilling. But to have, multi-kilo intercepts, high-grade silver intercepts over 4 of our holes, on our last hole being our best intercept, we were quite happy. That is, anytime you do one pass of drilling, you just kind of want to get a sense that there's something there to pursue. At the same time we were drilling, one of your favorite companies, Vizsla Silver, was making their discovery drill holes. They were just incredible high grade, 2-3 meters, and they made the widths bigger and bigger and developed it. So people saw that in us, saying, okay, this is a smaller vein system, but let's see if they can find that source and make this bigger. So after our first pass of drilling, which was only 5,000 meters of drilling, 16 holes, 1 diamond drill rig, we took a step back and we said, okay, we're in love with this story, obviously, but do we have, the horse blinders on? Are we blind and in love with our own story? We really wanted to get an unbiased approach. So we hired 2 world-renowned consultants to fly down, visit the site in Peru, walk the property over a week with our technical team and their technical team, and come back with an unbiased, opinion of what we have. And both of them independently said, you guys are on the right track. All of your intercepts where you hit came around 1,900 meters of elevation. all of your intercepts that were of any sort of substance, plus kilo high grade silver, came within 100, 150 meters of surface. So they're shallow. So you didn't find it at depth in your first few drill holes that you drilled deeper, 450, 500 meters, and you pulled those drill holes out. But if you go north on your property to this area that we call the Kootenay corridor, this is an area that's about 500 meters more in elevation. And what they're saying is over the years, 60 million roughly, the precious metals in the epithermal systems have been eroded off, usually exposing these big copper porphyries that we see to our northwest and to our southeast in Chile. But you still have that intact. And if you go to this Kootenay corridor, we believe the precious metals is there, it's intact, and it has not yet been eroded. All of those big giants to our northwest have at one point had an epithermal system resting on top of their porphyry. And so we said, okay, that's great. We have our silver targets. We know what we're going to go for, which is extremely exciting. And they said, okay, that's one thing. Now, we're not sure if you guys were only looking for silver, so you didn't notice. But we took a look at your deeper drill holes that you started your campaign with, and we noticed that the base metals were starting to pick up the deeper you're going, the moly, the heat, the fluid, the alteration, the fluid flow, the porphyritic dikes emanating on surface, the presence of a lithocap, just where we're located, there is every indication you guys are sitting on top of a big copper porphyry intrusion, which is driving the precious metals to surface and eventually being eroded off. So that was super intriguing and brought a whole different set of eyeballs to the story, including investors and most notably the majors in the area that said, hey, this tier one team might have found that porphyry that we've been looking for the past 50, 60 years in this gap in the system. So now we're faced with an interesting dilemma. You know, what is the focus and where are we at? Some of those copper majors, obviously, they want to see. We've had site visits from majors. Everyone wants to see another pass of drilling before they take a deep dive in. But we also have our shareholders that are silver crazy, and they want to see if we've got the prize at this Kootenay corridor. So, you know, it's one that we've been discussed internally. I can't tell you how many times of what the focus should be, but we have to keep in mind, okay, we're a public company. We have to, you know, watch our spend, watch what we do. It's expensive to drill in Peru. That's not a surprise to many people out there. And to do deeper hole tests, you know, I think we need 3 to 5 deeper holes to really see where that copper porphyry is, how deep it is, and how the grades turn out. Or the alternative is to do multiple up to 20 holes up in the silver Kootenay zone and really see if we start tagging that epithermal system. But to have that complete system is obviously a geologist's dream. And we've seen recent companies like Hercules Silver in Idaho go drilling for silver and come across that copper porphyry hit. And it drives the markets crazy because it's the kind of the double banger that any geologist would love to have there. So we're still early stage though, and we got caught in really tough markets. And you know, in hindsight, would we have done something differently? Taken the money that we had at the time, you know, a year and a half ago and put it to drilling. But I don't know if the market would have responded if we'd be in a different position that we are right now. But what we have done is really just tightened the ship up, preserved capital, reduced our burn by 45%, and really wanted to wait out these terrible markets because we know the power of silver. We know what it does when it's on. We know that when we get going, we'll be back in front of everybody. So it's been an incredibly humbling experience as a CEO because when I started, we had all the tailwinds and I thought I was the CEO of the year and then this was the easiest job in the world. And now I'm really facing it and it's tough. It's a tough position, but what I do know is that our 100% owned project that we have is phenomenal. And I can't say we've done dozens and dozens of desk reviews of other projects in Peru, in the Americas, and I've never ever seen grades like we have at an early stage in this project.
It is a tough position. And I suppose the main question is how do you get out of it? Is it really, are you at the mercy of the market? Like the only thing that can get you out of the market is that can get you out of this situation is the market, or is there something that you can do yourself? Like could you go and have $1.5 million now, give or take, in the treasury, if I'm not mistaken? Could you go and do like a 500-meter hole just to see what's in there? Or like, how do you approach that whole situation? How do you take yourself out of this situation?
Yeah, I think we always like to have multiple projects within our portfolio. That's the way the group is always run. At one point, I think we had 4 projects in our portfolio, but really we've scaled that back. Over the last 6 months, we dropped our hurricane project, which was in close to Cusco. This is a project that we picked up an option from a private group called Pembroke, former Newmont geologists involved in that. Incredible early stage grades. Lots of copper, lots of gold, silver. Most notably was nickel. This is the only known copper nickel deposit that people are aware of in that area of Peru. So it was really, really interesting. However, elevation, 4,500 meters, 5 or 6 communities involved. Access was very, very limited. So we took a step back in these markets 5 or 6 months ago and said, okay, what is the time that's going to be to drill and how much is this going to cost? And is this the type of market conditions that are going to pay for that for us to wait and see? And really, if the majors are telling you, you know what, it's going to take too long, it's going to cost way too much, and we're not interested, then what's the point of us going for that? Because really, as a small, nimble exploration company, it wasn't something we were going to be able to continuously fund to not be able to drill. And so we dropped that project. We put all our eggs in one basket in Curabaya, and we looked at our project. It was 17,000 hectares. This is a big piece of land. Curabaya only really accounts our area that we're concentrating in about 1/7 of that property. And so we started exploring on the rest of the property and came up with a couple, I think 3 new zones that host big silver and gold and copper numbers as well. So what we're sitting on is quite phenomenal. Now, back to your question, what can we do? What can we do to get out of this kind of downward cycle? Well, one, as you said, yeah, we could launch an extremely small drilling program, but again, if one drill hole doesn't hit, where does that put us after that? Then we'll have 0 cash and a miss. Really tough for investors. 2, what we're leaning towards is an acquisition. The one benefit to this kind of market is there are a lot of exciting properties out there that are available. We're not only looking within Peru, but outside of Peru, Central America, and really trying to see what kind of, something that would really bring a rush of excitement back to the story. And of course, where is there money available for something like that? Do you have to go and find something with a resource that you can kind of hang your hat on in tough times, saying at least we have 1 million ounces in the ground? Or is it something that isn't drilled before? Now, there is money available out there from the larger funds for properties and assets that are big, that are kind of development stage. Our group is exploration only. We really don't want to go down the stage of being development or producers. Of course, nothing is off the table if it's good enough. So there's money available for the big projects. It's just tougher to finance the early stage undrilled assets. People aren't really getting excited about raw pieces of land with some pretty good rock samples at this time. But we have a couple projects that we're taking deep dives on that we think will really turn the tables on this. But I think, even if we didn't make an acquisition, Curabaya remains very exciting. And all the rounds that we've made with the investment banking community, high net worth individuals, funds, people love this project and they want to see it get drilled. It's just, they know the position we're in and there's nothing to hide. We got caught by tough markets.
What does your geological team want out of this? And how deep do they want to go? Because you said you want to go deeper. How deep is deep? Is it 800 to 1,000 meters or is it less?
I think to test the copper porphyry story, we want to do 600 to 700 meter holes to see where it starts. We've seen a lot of good drill holes out of companies recently on copper assets, but the asset doesn't actually hit mineralization until 400 or 500 meters down. That you have to really wonder, is that economic? They might have some good grades, but that is a huge overburden to take care of. So our thesis, based on the CFAMT geophysical study that we did, is that these arms, the porphyry could run into mineralization around 100 to 150 meters in depth. So that's really what we want to test, because it's fair to say if we hit mineralization, but it starts at 400 meters, is that really going to be something that people want to go after? Maybe in today's environment with less copper assets out there, no discoveries really coming to light, maybe that does, bring a lot of excitement for the copper companies, and they feel it is economic going forward with copper shortage. But really, we want to see something kind of in that sub 200 meter kind of region to go test it out.
Okay. How much, because you said Peru is expensive to drill, how much are you paying per meter?
Yeah, so this answer I get a lot of enjoyment out of, because I hear companies talk about their all-in costs. And when we talk about all-in, we're talking about camp, safety, community, everything that goes into it when you're drilling. So when it's all in, we're talking, $800 per meter to get these things done. Now, the biggest driver of this cost is water. Even though we have two flowing rivers on either side of our project, Peru is very specific on what water is used and from where, and they're called water points. So for us, the closest water point we have is 50 kilometers away. So we do have to truck it in, stockpile it in pools, and get it up to site for the drill bit. Of course, we're going to use a diamond drill at this point because the geology team really needs to learn about the geology. An RC drill would just give us no kind of insight on where to go and how to really encounter it. Once we tag it, if we tag it, then by all means, bring in the RC drills, no water required. Those drilling costs get dropped dramatically to a few $100s a meter kind of thing. But at this point, that's kind of the cost. The drilling is the standard cost that we see anywhere else, but it's the water, it's the team that's involved, it's the communities, it's the safety, it's everything Peru that it is what drives the cost up. And when we're doing the silver drilling, we're going to keep those holes, again, shallow and short, quick turnaround in the labs, quick results to see if we can drill under these phenomenal channel samples and trenches that we've identified. So that expedites things and gives us a lot more bang for our buck.
So you told me you want to do 3 to 5 holes and you want it to be sort of 600, 700 range. If we take the upper limit of that, we do 5 holes, 700 meters. That's 3,500 meters, relatively small drill program, but 800 a meter, that's a $3 million program, give or take. That's basically what you're looking to. When do you think is going to be the right time to raise it? This year, or do you think the market's still not going to give you that?
Yeah, I think what we've heard from our largest shareholders, our base, investment bankers from the majors is, where are you guys going to focus? And overwhelmingly, that messaging has been, we want to see what you guys got on the silver first. And so that to us is our priority, is this Kambaya zone, because we have our drill pads designed out, our access roads put in, we have our targets ready to go all the way through 20 different pads. So we really want to see, it's the most progressed. We know we've encountered silver. We haven't encountered, prominent copper mineralization just yet to really go out and raise that money to go put 3 to 5 holes in the ground. So we know the silver is there. We're extremely intrigued about this Kambaya corridor that has that kind of preserved, uneroded kind of area. So that's the focus for Tier 1 silver. And again, because of the reduction in burn over the year, we feel that we just need to raise, $4 million in the next 5 to 6 months to really get that drill program off and going. And that can give us up to 20 holes if we're drilling, 150, 200 meter holes at a time.
Yeah, you're mentioning that reduced burn rate there. How much do you think it's going to be for 2024? Because again, if I have the financials correctly, it came up to about $250K a month over the first 9 months in 2023. How much is that going to be in 2024?
Probably around 170 to 180 a month.
Okay, so what are you cutting?
A lot of it is marketing. When we launched this program, we wanted to get the word out. We wanted to go to every single conference there is in the world. We wanted to bring on every partner we could and do every interview that we could possibly do. Travel obviously from Vancouver, we're far from everywhere, especially in Europe. So it was something that we don't regret whatsoever, because we took advantage of the time when precious metals were on a roll, and we wanted to get the word out, which is how we accomplished 15,000 shareholders and a huge base and a huge awareness and a great brand. We have that. We have the eyeballs on it. Now we just need to deliver. We're not a small junior that is waving their arms trying to get noticed on the project that they have. We have that audience in place. And so really I took a look and I said, okay, yeah, I could go here, I could go there, I could travel to Europe 4 or 5 times in London and do road shows in the south of France and everything. And I said, no, like we are just going to scale this back dramatically and really, tighten the ship on where we go and what we're doing. Also personnel. Peru is an interesting place. They have employment laws where if you hire geologists, technical team, staff in Peru, you get them on a contract basis. After 6 months, time comes up, they force you to hire them as full-time employees, or you have to let them go completely. And we had a really good team at the time. We were doing our drilling and exploration, but we were kind of waiting out these markets. Are they going to turn? Are we going to get any kind of love here that will allow us to keep this team in place? But it just got to the point where enough was enough. And sadly, we had to make those really hard decisions and say, we need to cut our technical team back, especially if we're not drilling. We could always hire back on a contract basis while we drill, and then we've learned shifts and pivots and reduce the team at any certain point. So it's the reduction of camp, it's reduction of personnel, not only in Peru, but here, in our corporate office in Vancouver, reduction of travel and marketing expenses, and really, the old 80-20 rule, really focusing on the marketing, the conferences that really provide value, and that's really where we've made most of our expenses and salary reductions and stuff like that across the board with executives.
Okay, so you're thinking somewhat in the 170 range, a month for 2024 should be achievable.
Correct.
Okay, good. So well, that's still about $2 million in G&A, right?
Correct.
A year. Okay. Sure. When it comes down to raising capital, how do insiders and just people involved more deeply with the story, like Mr. Bebic, how do you guys look at coming in as financiers as well? Putting your own money into financings.
Yeah, absolutely. I mean, obviously, we want to take part in every single financing that we're doing. It's a great signal to the market, and obviously, it's easy for us to believe in our project because we know what we might have there. For shareholders, for the audience that you have, I came onto Tier 1 Silver as an already established company. It was a spin out of our foreign parent company, Oren Resource, which I didn't have any involvement in. So I'm not a founder. I wasn't able to, gift myself, 5 to 10 million shares at no cost. So I've been picking away, taking part of financings, taking part in the market where I can. I have shares average cost that might be $1.30, $1.40 Canadian at this point, because we did go up to $1.90 Canadian when we came to market. We had a $250 million market cap based on rock samples at the time. That was an extremely powerful market at that time that, anything you touched went up. And now, obviously, we're paying for it in the last year and a half. It's been a real struggle, and you really have to come with the goods to get any sort of movement in your stock. So yeah, anytime we can have insider participation in our last financing, every single one of our directors, our CFO, our founder, our chairman, Ivan Bebic, myself, we all took part in the financing, and it was a great show of force and great commitment from our directors.
SETI tells me that you have 117,000 shares. Do you know off the top of your head what your average cost of capital is?
I'm going to take a rounding guess and say it's probably around 80 to a dollar, 80 cents to a dollar would be my average cost, considering where I was buying it above a dollar.
So what, you're sleeping on the couch these days? Wife's not happy?
Tell me about it. lots of 3 a.m. Internal wake up calls where I stare at the ceiling and I say, how are we going to get this done? What are we going to get this done? And I eat, I breathe, I sleep when I can. All I do is think about this story and how we're going to get it going. So it's a huge passion of mine, and nothing that we're willing to walk away from at any time right now.
Okay, good. When's the next time you and I are going to have something to talk about if we were to do another interview. When's the next time you're going to have something to talk about?
I'm hoping soon. I mean, as I mentioned, we're looking over a couple projects right now that would really truly be exciting for us to bring into the fold, reinvigorate the story. Again, people know that we need money to drill, so something that we approach in the next 3 to 4 months to really tap the market. Where fingers crossed, we see a turn in the sentiment. We've seen little green shoots here and there where precious metals are heading up and they go on a good run. We're just waiting for that capital to come back into the markets again and provide that kind of buoyancy. We're going to do things along the way. We have very good marketing teams and people and partners that are going to help us lift this story out of the basement, so to speak. But for the time being, it's just strategizing and really getting this thing back in front of people, because it's quite a deal for new shareholders to come in right now at the price that we are compared to where we were. The market cap, I haven't touched the shares as far as marketing or bringing in some substantial buying. This is where the market has kind of placed us at this time, around 10 cents Canadian. And I get it. We were a $250 million market cap with no drill holes. Yeah, of course that was ahead of ourselves. That was just the timing of the market, and the market was crazy at that time. So now the rug was pulled out on the sector, so to speak. Interest rates are high. There's no capital flowing in there. Investment bankers are in the same position that anyone else is. They have clients they need to call, and there's no money available right now because risk is off. But the moment we start seeing interest rates dropping, the US dollar coming down, precious metals getting a hit, capital injecting, I think we start seeing a lot of the exploration companies doing really well.
All right, thank you, Peter. And again, that's tier1silver.com or TSLV on setterplus.ca for the company's official filings, which you should read before moving on. Moving on, though, now, actually, I am taking it up by market cap today. Maybe future episodes, too, just kind of makes sense for me. So next up is Northern Graphite. Northern Graphite is a graphite producing company. The company is listed on the TSX-V under the ticker symbol NGC, which obviously stands for Northern Graphite Corporation. And there's about an average of, about 130,000 shares trading each day, with a 52-week high of 70 cents and a 52-week low of about 18 cents. Today, though, with a market cap of about 27 million Canadian dollars and about 130 million shares outstanding, this is a 21-cent stock. So it is closer to its 52-week low than it is to its 52-week high. There are almost 33 million warrants and about 11.5 million options that are still outstanding, and that's resulting in about 175 million fully diluted shares. Insider ownership here is about 3% of the company. Sprott Inc. owns about 4%, and there is a few large institutional owners as well, about the size of Sprott, as you can probably see on your screen right now. And then the rest is retail and potentially other institutions that are not known. As of the end of September this year, the company had a little over $2 million in cash, a little over $3 million in account receivables, as well as an inventory of about $22.5 million and some prepaid expenses, for a total value of the current assets, and that's on September 30th, of around $30 million. Whether they planned it or not, I don't know, but September 30th, $30 million. I'm not a conspiracy theorist. Jokes aside, that sat on the balance sheet against about $13 million, so that's $13 million in current liabilities, mostly consisting of account payables and the current portion of a senior secured loan. Over the first 9 months of 2023, the company generated nearly $13 million in revenue, since, again, this is a producing company, so they make their own money, basically. And they also actually managed to make money. So they managed to generate positive EBITDA, although net income is still negative. And I'm hoping to talk to Hugh about that later on. The company spent about $6.5 million during the first 9 months of the year on G&A, which means they spent about $730,000 a month on keeping the lights on. Annualized, that's about $9 million in general and administrative expenses for the whole of 2023. Although I guess we'll have to wait and see what comes out of there when the full year numbers are released, hopefully in the not too distant future. That aside, Northern Graphite says it's the third largest non-Chinese graphite producer and North America's largest producer of natural graphite. But is this really a sustainable business strategy? And what's really going on? What is the plan to, is the plan to grow production? And Hugh, now I'm talking to you. Is the plan to grow production so that you can keep this spot of the largest producer in North America? Or is your plan to, I don't know, maybe divest, sell some of the assets and then bring other development projects into production and then sell those again later on in that way, play the graphite market? Talk to me about the high level strategy here, Hugh.
Sure. Northern Graphite was a company that was set up back in 2002 around a project in Ontario called Bissett Creek. And for about 20 years, the company developed that project. And then a couple of years ago, I got involved as an advisor with Northern Graphite, and we decided that we wanted to really develop the company, both in terms of mining assets, but also moving downstream to address the battery industry, and in particular, the anode in the battery itself, which is entirely made of graphite. And so a couple of years ago, we made a move, and we basically acquired two mines from Imerys, which is a large industrial minerals company, two graphite mines from Imerys. One of them is in Canada, and it has been operating for 30 years. It's actually the only producing graphite mine in North America. So not the largest, but the only producing mine in North America. So we acquired that mine, and we basically have been producing graphite and selling graphite to about 100 customers from that location since April of last year. And then we acquired another asset from Imerys, which is a mine in Namibia that they had started in 2016, which was also producing graphite. It was put back in care and maintenance in 2018 because at the time the market couldn't support the additional capacity and the cost. And so we bought that mine, and we're busy putting it back into production, and we expect to have it back in production at the beginning of 2025. And the mine in Lactasia currently produces about 15,000 tons, but it has the capacity to produce 25,000 tons. And the mine in Namibia, when we restart it, will have capacity of about 30,000 tons, and those are flakes. And so, with the three assets that we have, we actually have enough capacity to be the third largest producer outside of China, and that's how we present ourselves today. But this is only the first step of our strategy, because the second step of our strategy is then to move downstream and to build anode material plants that could then take the graphites for those three mines and basically transform it into anode material for the battery. And at the same time, all the customers that we have currently serving them from Canada, they supply graphite flakes into a wide area of applications. So, for example, they sell into the refractory industry, they sell into the electronics industry, into the lubricants industry. And so, not only do we service these industrial markets, but then by adding these anode material plants, then we will be, servicing the entire scope of the use of graphite flakes from, the fuel cell all the way down to the battery itself.
It's generally interesting to me that you're going for the mine to market strategy, if you will, because that's not typically what a mining company does or specializes in, right? As it requires an extra layer of processing, production, to get that final, end product. But it also requires just a general understanding and management, really, of the market that you're in, as well as your connections with those end users and a dozen other skills probably that I'm not thinking about. So how does that strategy make sense for you financially? Like, where exactly is the biggest benefit to go upstream and downstream at the same time?
Well, I mean, personally, I've been in the industry for 10 years, right? So I used to be the CEO of Imerys Graphite and Carbon, and knew those assets very well. And I think, one of the things that many people don't understand about graphite, it's not really a commodity that is traded. So if you produce it, it doesn't mean that you'll be able to sell it. And so, having the ability to go from mine to market in the graphite industry is absolutely necessary to be successful. There isn't a place where you can just, produce your flakes and have them traded on some sort of an exchange somewhere. You have to find every customer, you have to find every application, and you have to be technically capable of understanding what the needs of the application are. And you're not just supplying one grade of graphite. When you're producing graphite, you're producing flakes, you're producing different sizes of flakes, and you're producing different level of carbon concentrate from between 94 to 99.95%. And so, it's very important to understand and to have the technical capability to service all these businesses. And that's why, the India acquisition we did was actually very clever, because it gave us these 100 customers that we are servicing mostly in North America. It also allowed us to build some very strong partnerships with people who in the industry have the technology and the capability to help us move downstream. And it also gave us the ability to build on that customer base and to build on that demand, and to then act with a modular approach and increase capacity with demand, so that from a company perspective, we can grow our cash flow, we can grow our margin, and we can grow our EBITDA. So if you look at the mine in Canada today, that mine produces about 10 million of EBITDA on an annual basis. When Namibia will be up and running, it will produce about 20 to 25 million of EBITDA. And as we move downstream and increase capacity, we can continue to improve our margins, and we control the market, we control our customers, we control our pricing. And we get a much higher price than you would if you were just trying to sell your flakes in China today, where it's extremely competitive and it's very difficult to make money. And we have to do that because our cost is higher, right? If you're producing graphite in Canada or even in Namibia, your cost structure is higher than what is happening in China today. So by controlling the mine and the market downstream, you can make sure that you are profitable, and you can make sure that you have a growth strategy that you can execute upon. But it does require a strong team, and it does require experience, expertise. And Northern Graphite today is by far the company with the longest serving experience in the market, and has a very capable team of people who have been in the industry for decades and really understand what the customer needs and how this product can be monetized, and how to make sure the company is profitable. And as the market grows and develops, puts us in a very good position versus a company that is still trying to develop an asset and doesn't have customers yet, and doesn't have the experience and the expertise that it needs in order to be able to service that industry. On the battery side, it's a little bit different, because today 90% of the world's anode material are processed in China, whether it's natural or synthetic graphite. And so, by having a strategy to develop the downstream activities in the battery, and we are not doing this alone, we're partnering with companies that have knowledge and expertise and technology to do that. But we are really quite a pioneer, in doing that. And the reason why most of the companies today are sourcing their materials from China is that there isn't really much demand in Europe or North America for battery anode material. If you think about the battery, the anode is 50% of a battery. The role of the anode and the graphite in the battery is really to act as a storage medium for the lithium ions that are being inputted in that battery. And until there will be large gigafactories established in North America and Europe, most of that material is being processed and consumed in China. So with regards to batteries, we have to work hand in hand with the battery manufacturers that are establishing gigafactories in Europe and in North America. And we have to basically design and qualify a product that will be using our flakes and will be using the technology that our partners bring to the table, so that as these gigafactories come into play in North America and Europe, we will have a product available for them to source locally and to be able to grow their businesses. And if you look at the future demand for battery anode material in North America and Europe, it's significant. I mean, by 2030, there will be 1.3 gigawatt of power. 1.3 terawatt of power in North America, and there will be about 1.2 terawatt of capacity in Europe. And so we're talking about 2.5 terawatt of capacity that will require graphite, which will require about 2.5 million tons of graphite on an annual basis. And, we're looking at producing about 200,000 tons of anode material. So we would probably be able to cover maybe 15% of the market as a total with our capacity. So we won't be the largest player, but we intend to be a significant player. The other point is that, in the battery industry, people will pay between $9,000 and $11,000 per ton for the material that comes out of a processing plant. Whereas, the average price at which we sell our flake today in the market is about $1,500 per ton. So there is a large premium to be captured in the market if you're able to transform your flakes into anode material. And although there is large investments to be made, the margin that can be generated from these operations is significant.
And well, but to your point there, like it does require upfront capex for you to be able to do that. And so as far as I understand it, you want to have one production facility and then supply it through mines from all over the globe. So basically truck and then ship the concentrate to that production facility. Is that right? Or do you want to have different production facilities on different places?
Yeah, at the moment we are looking at setting up one facility. We have picked a location in northern Quebec to do that. It's called Baie-Comeau. And that facility will be a modular facility. So we will basically start producing anode material there in 2027. And the intent for us is to take the products of our mines in Canada and in Namibia and to ship it to Baie-Comeau in that one facility, and then transform that material into anode material, and then have that material being shipped either to North American customers or European customers to then be inputted into the battery. And the way we've designed the facility, it's going to be modular. And so although the total footprint of the facility, which is about 1.2 million square meters, so it will be quite large, the lines within that facility will each be made up of about 10,000 tons of capacity. And we can drop these lines based on the demand that we will have. So, the strategy is for us to work with the OEMs to understand what their demand is going to be, when that demand is going to be hitting, and then usually around 2027, and then to work with them to qualify a material and to basically sign an offtake agreement with them for that capacity, so that we can then raise the funds that we need in order to supply that capacity in 2027 and beyond.
And that's all west of the so-called new Iron Curtain. I mean, or do you also plan on selling east?
Yeah, so our strategy is definitely in line with what Europe and North America is doing. I mean, in Europe, they're working around specifying the type of material that they want to see in the battery, and in the US, they're implementing the IRA, which basically, will require any battery manufacturers who wants to benefit from the $7,500 rebate that the US government is offering for the consumer of electric vehicle In order to get that rebate, the material in the battery will have to come from a country which is either the US or another country that has a free trade agreement with the US. And if any of that graphite comes from China or any other entity of concern, such as Russia or Iran, then that battery will not be eligible for this rebate. So, our strategy is really to provide a IRA compatible or a non-Chinese material to these battery manufacturers who intend to supply their batteries into vehicles that will be sold in Europe and in North America. So we don't intend to sell that material in China or in Asia at all. Most of it will be dedicated to Europe and North America.
Where I'm coming from with that question is because we've seen a couple of Canadian companies being blocked from doing too large of a business with the East, or like whenever a Chinese buyer, for example, of a potential buyer of a project would like to come in, the Canadian government will block it, and so on and so forth. So it's a whenever it's critical metals and minerals, it's challenging, and that's making me think about how's interest from institutional investors for you specifically? Like, are they calling you up? Are they requesting meetings and so on and so forth?
Yeah, I mean, we're a Canadian listed company, so obviously, we spend a lot of time talking to investors from the retail world, from the institutional world. We are also having a lot of discussions with large pension funds in Canada, but also outside of Canada. We also are having discussions with the Canadian government, with the US government, and some European governments about what kind of support they can provide for us to be able to build these activities, both on the mining side but also on the downstream side. Eventually, what I think will happen is we will be able to basically fund these projects one at a time by defining, a very specific supply chain from the mine to the market. And I think the structure of the financing of these projects will probably be about 1/3 state funded, 1/3 through debt, and 1/3 through equity. And so,
what makes you say that? What makes you think that 1/3 of that is going to be government funded?
Well, because there is an intent from the government to support these projects. I mean, for example, in Quebec, the regional government of Quebec has put in place some incentives so that if we build our project in Baie-Comeau, we will get quite a large amount of that project funded through some of the vehicles that the Quebec government has put in place. The same applies in Europe. If we were to build a project in Europe, there's quite a lot of incentives available for us to implement through the use of tax credits or bank guarantees and so on and so on. And so, the estimate that I give, 1/3, 1/3, 1/3, is based on, the discussions that we've had over the last 2 years about what is available and how we can, make this project work. If we have an offtake agreement for a specific customer over a period of time, it's relatively easy to raise some debt as well for the project in complement to whatever we would get from the government. And then the remainder we should be able to raise from the market. And this is, what we are intending to do.
What do you think? How do you think that debt is going to be coming from? Is that because I know you're working with Sprott more closely? Is that something like would Sprott lending be one of that, or are you thinking someone else?
No, I mean, we worked with Sprott on the transaction we did with Imerys, and therefore, they helped us raise the money to do that, and we raised $56 million to do that transaction on those two mines. And basically, we raised the money through various forms. We did a debenture of about 12 million, and then we did a stream on our Namibian asset for 20 million, and then we did a royalty on our Canadian asset for 4 million, and then we did a private placement for the rest. which was about 24 million. And, the interesting thing is that, most of the debt came through the Sprott stream and royalty fund. So they basically funded that. And the Sprott Capital Partners, which is now called SCP because there was a management buyout there, they basically helped us raise the money in the market through a private placement with a number of different investors, and institutional and private investors.
Right.
And so, we continue to work with them, but obviously they're not the only two entities in the market that can work with us. And of course, they have an interest to continue to work with us. But there are also a lot of other interested parties. We've also had discussion with Infrastructure Bank of Canada. We've had discussions with the Export Bank of Canada. So there are a lot of different avenues that we can explore in order to fund these projects. And I think the most important thing for us to do is to have a quality graphite that can be used in batteries and to be in production and proven that we can produce the material. I think it's important for us to develop a battery anode material that the customer can use so that we can qualify that material and develop a relationship with a battery manufacturer to use the material. And then it's important for us to work with the local authorities and the local government to maximize, the support we could get for them, because there is a very strong interest from all these governments to create this supply chain outside of China, because today 90% of the anode materials around the world are processed in China, and nobody wants to use the Chinese material anymore. So I think, we will get a lot of support.
Luckily, when you did that raise back then, though, the share price was higher than it is right now. When do you think you're going to have to come back to the market for a big or not such a big sum? But in any case, I mean, why I'm asking this is because, again, share price is not ideal to be raising capital right now. I'm looking at the chart right over here. So yeah, when do you think you're going to have to come back to the market?
Well, we probably don't have to come back to the market to raise more capital until 2025, 2026. So, we have a producing mine in Canada. So we are generating cash flow, which is supporting our overhead and some of the investments that we're making. We have to work on restarting that mine in Namibia. And in order to do that, we're working with our current debt partners and new debt partners to be able to raise more debt for that project rather than equity. And the PA we published back at the end of last year for the restart of our Namibian project calls for about $35 million US. And so, we've been working diligently to raise that money through debt or debt-like instruments. And so we don't intend to go back to the market before 2025 to raise more capital. That will be more for our anode material plant. And by then, we should have a pretty clear idea of where that material is going to go and who's going to use it and in what quantities. And I think that will help us to be able to do that. But, overall, if you look at the entire graphite industry over the last 6 months, which is really surprising, I think, most of the companies' market cap have gone down quite significantly. And, it seems to me like the market really doesn't understand yet how important graphite is for this industry. And, part of our job is to educate the market. And this is why we're doing interviews like these ones, where we try to explain to people, how critical graphite is. I mean, if you look at the battery, there isn't a lithium-ion battery without graphite. It is a very important part of the overall system. It's what basically stores the lithium ions. in the batteries. So if you don't have the graphite, you don't have a battery.
Right.
And today, 90% of all the graphite used in lithium-ion batteries is being produced and processed in China. And therefore, establishing graphite capacity and anode material capacity outside of China is absolutely critical. And there are a lot of companies that are trying to do that. I would think that we're probably one of the more advanced ones. I would think we have probably a 3-year head start on anybody else because we are already in production. We already have material that we can work with. But at the end of the day, all of these graphite companies are going to benefit from the situation that we're in. And the battery manufacturers who are establishing significant capacity in North America and Europe are going to need graphite suppliers outside of China. And therefore, in my mind, graphite has a lot of potential, especially at the current valuation today.
Right. Are you still planning on moving Auchan this year?
We already started. So
Okay. How much money is that going to cost you, the whole thing, to move it?
The PEA that we published talks about 35 million US.
Right. Okay. That's for the move and well, basically putting up the new facility.
That's for the move of the existing equipment that is in Okoruso today. So, our intent is to basically take the plant in Okoruso that was producing graphite and move it to the mine site in Okangende. Then once we've moved it, we're also going to build a brand new tailing dam. We're going to bring water, we're going to bring power, and we're going to restart the facility. And so the 35 million basically, is for that whole process. So it's not just about moving the plant. Moving the plant is actually the easiest part of a project. What's more expensive is making sure you build your tailing dam and you bring your power and you bring your water. So there's a lot of other activities that are not directly related to the moving of a plant itself. But what's very interesting is that, in the end, that project is a great payback. I mean, it's a 4-year payback based on the capacity that we would produce. And I think there's an opportunity for us to improve on that because the existing plant that we're moving has a 31,000 ton of capacity, but it can be easily debottlenecked by adding a couple of mills and doing a little bit of work. So, one of the great things about moving the facility is that we're giving ourselves a lot of room to expand in the future. Whereas if we just had restarted it where it was, we would have been limited in time and in capacity as to what we were going to do. And that's why we make that decision to move that facility. And, right now, if we were to produce 32,000 tons in Okangende, I'm not sure where we would sell it because the demand's not there yet. What I said before is that most of those gigafactories that are being built in North America and Europe will start producing in 2027. So, for us to be able to be in production in 2025 and start producing some material then will basically give us an opportunity to be first to market and to be right there in time with potential expansion of that facility because there's 1.6 million tons of graphite in the ground in Okangende. So, the 31,000 ton plant is very small compared to what we could actually build there and produce. But it gives us that first mover advantage, that I think will really convince the battery manufacturers to work with us to transform that graphite into anode material. And then to provide us with the offtakes that we need so that, we can get funding to do the BAM plan and grow the capacity of the BAM plants and the mine plants as these battery manufacturers will require more material. And so, our strategy is not to just go all out and build one big mine with one big plant. We want to use the modularity of our assets to be able to build the capacity step by step as these gigafactories come online and partner with them to become, a big portion of their supply chain. And alongside us, there are many others. Look at Sierra. they're building their 11,000 ton facility in Louisiana. They should start that up, sometime this year. And then they intend to expand that from 11,000 tons to 30,000 tons, and then from 30,000 tons to 50,000 tons. Nouveau Monde in Quebec, they're trying to raise the money to be able to start their mine and to start their BAM plant in Bécancour. And, they intend to produce between 40 to 50,000 tons of BAM material in Bécancour starting in 28 or 29. So, every graphite player out there has a plan to produce anode material and to go from mine to market. I think the big benefit for Northern is we're probably, ahead of everybody else in terms of our capacity because we have these existing producing mines. So,
if we take all three of your projects, including, moving the Okanjanda plant, building Bissett Creek, and ramping up Lac des Îles, how much money do you have to spend between today and 2026 to be at that 75,000 tons per year production profile?
So we can produce 25,000 tons in Lac des Îles today.
And you're hoping to ramp that up to 75 by 2026, right? I mean, not Lac des Îles, but company total.
Yeah, but so just to explain, in terms of capex, what is it that we need? To go from 15 to 25,000 tons in Lac des Îles, we don't need any capex because the plant has that capacity already. What we are doing in Lac des Îles is we're doing some exploration so that we can extend the mine life because the plant that we bought in Canada was producing on the one pit called Pit 2, and that pit was coming at the end of life at the end of this year. And so we needed to find additional resources on the mine lease. And what we did this summer is we did a big exploration campaign, which came back with some really promising results. And during the course of January or February, we'll be publishing our updated resource estimates and reserve estimates for our Lac des Îles facility. But we feel like we have a great opportunity to increase the mine life significantly by using additional material within the existing mining lease in Lac des Îles. And okay, there's a bit of...
What's the mine life right now, by the way, on Lac des Îles?
So the current pit that we're mining will come to its end of life by the end of 2024. So that's why we have to open a new pit during the course of 2024. That's why we did the exploration last year. And during the course of January and February, we'll be announcing the results of that exploration, which look very, very good. So we are very confident that we'll be able to extend the mine life and open a new pit this year in Lac des Îles to extend the mine life, but also extend the capacity, because as we open the new pit, then we can ramp up from 4 to 7 days production, and we can go from 15 to 25,000 tons without spending any capital on the plant, because the plant already has that capacity. Then, if we look at Namibia, the 35 million is what we need to be able to take that facility to 32,000 tons. So we're talking 35 million US, and then we will have capacity of about 57,000 tons. And then what we can do is we can expand the Lac des Îles facility by building another plant of 25,000 tons next to the one that we already have. And the estimate to build that plant is probably about 50 million US, but we haven't done any technical studies on it yet. It's just a rough estimate, rough guess that we have. Now we'll add another 25,000 tons of capacity. So that would take it to 50,000 tons. And as I said earlier on, we can debottleneck Namibia, go from 31 to about 50,000 tons by adding a few mills, probably spending 10 million of capital, additional capital to do that. And then we could build another 50,000 ton facility next to the one that's there. The cost of doing that is probably about 150 million. So, that's the capital we would need. And then we could build another 50,000 ton facility next to that one, and that would be another 150 million. And then if we wanted to develop Bissett Creek, the PA that we have right now to produce 40,000 tons in Bissett Creek would be about 120 million US. And if we wanted to go all the way up to 100,000 tons, probably cost us another 150 million. So if you add all these numbers up, to go from the 15,000 tons of capacity we have today all the way up to the 300,000 tons we could produce out of these three assets, we're probably talking about 600 million in total. And the Baie-Comeau facility, the BAM facility, we probably need about 1.2 billion to produce 200,000 tons out of that facility, but it's modular. So you could, you have to build the infrastructure and then you have to drop these lines one by one, to be able to produce. But remember, if you have a customer at the end of that line, then it becomes, I wouldn't say easy, but it becomes relatively straightforward to put together, the business case and raise the capital that would be required, because, selling 200,000 tons of anode material would generate about 2 billion of revenue. So, you're talking about a significant business opportunity.
Where in that process do you expect to turn profitable, or what time frame is that?
Oh, we are profitable today.
Well, not net. Well, you have EBITDA, but you don't have positive net income on the annual.
Well, because we're using our cash flow, from Lac des Îles to advance our projects and to cover our overhead. So we're in a growth mode. So we are basically, utilizing the profits that we're making out of Lac des Îles to advance our projects. So, but if you look at the facility itself, it's profitable today. We're generating about 10 million of EBITDA. When Namibia will be up and running, it will generate about, 20 to 25 million of EBITDA on an annual basis. Now, the company can decide to take that profit and reinvest it in the company to advance the projects that they have. I mean, that would be normal for us to do. But at the end of the day, the business is profitable today. And I think this is what's really interesting to me about the strategy that Northern Graphite has put together, is that we can build this company from the profitable position it has today and keep it profitable moving forward, whilst reinvesting these profits to continue to advance the projects that we have. And that's a very unique position, because most of our competitors are not profitable today. In fact, most of them are burning cash because they don't have a production facility in operation. And the ones that do have a production facility in operation are not necessarily producing or generating income.
Does reinvesting those profits, does that include, or that cash flow, better said, does that include you doing M&A? As in, because you have this plan. Let me tell you where I'm coming from. You had this plan, you've had it for a while now, this strategy, yet you made an acquisition this year that was that was interesting to discuss. So are you planning on doing more of that, or are you just focused on building these three plants?
Yeah, of course. If we can use the private equity model to make some acquisitions, we absolutely should, right? Why shouldn't we? Especially if we are moving downstream. I mean, I think our NeoGraph story is a very interesting one. There was a customer, been a customer for more than 30 years, and used to be part of Union Carbide, and after that, Graphite. The company was sold to a private equity fund back in 2017, and that private equity fund last year decided they wanted to sell the business. And so what we did is we partnered with a private equity firm out of Cleveland called Edgewater Capital, and we basically, worked with them to complete that acquisition and took an option to acquire a share in that business with the ability to increase that share over time. And why did we do that? Because that business basically takes our flakes from Lac des Îles and intercalates them and expands them for a number of different applications in the electronics industry, in the construction materials industry, in the graphene industry. And for us, it was a very natural thing to do. From the private equity's point of view, it was great because it was securing the supply from us. And from our perspective, it allowed us to move downstream and to capture a higher value of the products that were built on our flakes, going down to these markets that, we currently don't serve. And that company has a lot of technology and a lot of knowledge and a lot of know-how. And, we have an excellent relationship with them because we've been supplying them for such a long time. Now, if these opportunities continue to appear, we'll definitely find ways for us to participate and to continue to expand downstream, because that's our strategy. Go from the mine to the market.
But only downstream, like you wouldn't be looking to buy other projects, as in other development projects or even operating mines.
Well, we did buy another deposit last year called Musso, which is about 70 kilometers from Lac des Îles, and we bought it because we think at some point in time that resource, which is about 200,000 tons of graphite in the ground, which has been already identified, and 43101 has been published on that. So, we did acquire additional resource of graphite in the Lac des Îles area, which we think one day we'll be able to integrate and use. There are a lot of claims and resources around the Lac des Îles area. It's a very strong graphite area. And if you do a bit of research, you'll see there's a lot of companies doing exploration around us, and there was some success. And so, for sure, if an opportunity appears, we will look at it and we'll evaluate it. But we already have a lot of graphite in the ground. Maybe we're 1.6 million tons. In Bisset Creek, we have 1.2 million tons. We'll publish the numbers in Lac des Îles, but it will be significant. So we have several millions of tons of graphite already on our books. I think what we want to concentrate our efforts on is more getting that graphite out of the ground and into a bag so that we can sell it. I mean, that's important. And then moving downstream to be able to capture a higher share of the value that can be created with that material, whether it's a battery or a fuel cell or construction materials. That's what we want to do. Because as I said at the beginning, there isn't a trading market for graphite today. So if you produce graphite, who are you going to sell it to? I mean, today, your only trading market is China, and that's at $600 a ton. And so if it's costing you $700 a ton to get it out of the ground and put it into a bag, why would you want to go sell it to China at $600 a ton? Doesn't make any sense.
Yeah.
So you have to find the market outside of China. And that market today is not very large, but it will grow, and it will grow very fast, and it will be extremely profitable. But it will take some time. And so, this is our strategy. Our strategy is to develop the company step by step, based on the assets we already have, expanding them, and moving downstream as much as we can by leveraging the position that we have, either as a supplier or as a technology provider. But
do you feel like a takeover target in the meanwhile, though? As in, in the Chinese, in Namibia, you're basically operating in the Chinese's backyard. They're very familiar with the jurisdiction. They operate different mines in there. As you know, so would it be even possible for the Chinese to try and take you over, or try and take over your Namibian projects?
Well, we own the project 100% in Namibia, so it's not for sale. We are developing it. I mean, of course, somebody could always try to make a hostile takeover on our company, but at the end of the day, okay, good luck to them if they want to try. That's not such an easy thing to do. I think, from our perspective, we have some really good assets. We have a fantastic team. We have some great customers. We have a lot of support from the communities that we operate in, from the governments of the countries we operate in. And we have a very clear path. We are communicating extensively around what our path is. And, I think we will be very successful. but it's going to take a bit of time. I mean, the company is only, in its current form, it's only a year and a half old. So you have to give us a little bit of time. But today, if you wanted to buy the entire graphite industry that's listed in Australia and Canada, you probably need about, based on the market cap of the companies, probably only need about 1.2 or 1.3 billion. And that would include the likes of Syrah and Nouveau Monde. And so, it's the value of the market today is where it is. We cannot influence that. Hopefully, some of these investors will realize, how attractive these companies are, and it's not just Northern Graphite. I think any graphite company today is attractive based on its valuation. Some are more attractive than others. I tend to think that Northern Graphite is probably the most attractive one of them all. But I think any of these graphite stocks out there are super interesting right now.
Yeah. Well, I'm not surprised you think your own cooking is the best tasting one, but I appreciate that. It's what about, because you're bringing up an interesting idea, maybe what about consolidating with some of the other significant producers outside of China, like basically gathering your guys' powers? Is that something you could do?
Yeah, I think industry consolidation will happen at some point, for sure. I mean, it's pretty obvious, there are quite a lot of companies out there, and at some point the big boys will get involved, and they will want to try to consolidate the market. But I think it's still quite early to do that right now. If you look at all these projects, look at Syrah and how much they're struggling to get, their project up and running, and look at NextSource. They have a very interesting mine in Madagascar, and they recently built their first facility there, and they're starting to produce their first tons of material and putting it in the bag. But it's difficult. Producing and selling graphite is difficult. It's not easy. So I think it's still a little bit early. I think some of these funds have gotten involved very early on. They probably feel that their exposure to graphite is already significant today based on what's happening in the market. So I would assume that, right now they're not so interested in doubling down on their investments in graphite. But I think, the news that we heard in December when China started restricting or controlling some of the export of the materials, that has had quite a bit of an impact in my mind. And secondly, the US coming back and making it clear what entities of concerns are and how that will impact the IRA, that also created quite a bit of news. So, let's see what happens. But I am quite hopeful that, the industry is going to realize how important this material is. And there's not so many active projects out there. And the values of those projects, if you add them all up together, is not that high. So for sure, people are going to want to get involved, and money is going to start flowing into this industry. And when it does, share price is going to increase, and it will enable a lot of these companies to do the investments that they have to do, including ourselves, because there is a lot of capital that has to be deployed, and there's a lot of risk associated. To build a BAM facility is not that easy. You have to know what you're doing, and to build a graphite mine is not that easy. You have to know what you're doing, and I think a lot of people are starting to realize that. But the opportunity is there, and this is why I think we've made the right choice so far. But the proof is in the pudding. We have to execute. We have to be able to show that we can get it done.
Proof is in the pudding. You're right there. I'll be following along, Hugh. This was a good conversation. I don't think I have any questions left. Is there something that you came here hoping to talk about, but I'm failing to bring up?
No, I think first of all, thank you for having me on. I think the more we can talk about this industry and the more we can talk about our company, I think it helps us a lot. So thank you for having us on, and I really hope that investors are going to start realizing, what a good opportunity graphite is. And if anybody has any questions, feel free to reach out for us or for me. We are very reactive and always happy to talk to people who are interested in investing in the company and in the space.
All right, thank you, Hugh, for the bravery, and I hope you enjoyed your stakes. It's northerngraphite.com for people listening for more information, and of course, you have to read the company's official filings on setterplus.ca. As to the barbecue, 2 stakes down, 2 more to go. Moving up the market cap spectrum, next up is James McDonough, geologist with multiple decades of experience, 30 years of experience, funnily enough, more than I've been on this planet for. And he's now running Kootenay Silver. Kootenay Silver is listed on the TSX-V under the ticker symbol KTN, where an average of about 85,000 shares trade each day with a 52-week high of $1.80 and a 52-week low of about 60 cents. With a market cap of about 49 million Canadian dollars and about 46 million shares outstanding after the recent consolidation of shares, that is. Today, this is a $1.07 stock. There are 18.5 million warrants and about 3 million options that are still outstanding as well, although at higher prices, and that's resulting in about 67 million fully diluted shares. And again, this is after a recent 10-for-1 share consolidation. A few big names in here are including Eric Sprott, the person, not the corporation. He owns 8% of this company. Condire owns 9%, and there's also a bunch of other institutions in here accounting for about 30% of the rest of the shares, and management owns 4% of the company as well. As of the end of September this year, the company had $1.7 million in cash, $1 million, I'll give or take $1.5 million in account receivables, and $1.9 million in marketable securities, resulting in current assets equal to about $5.5 million. Now, that's sat on the balance sheet against almost nothing in account payables, which I guess is welcome. There's $270,000 in account payables, and there's also no long-term debt. Those are the last official filings available, but again, they're from September, so beware, the financial situation might have changed since then. As companies, big shocker here, they spend money to survive. For Kootenay specifically, they spent about $1 million during the first 9 months of the year on administrative expenses, so about $100,000 a month, give or take. A little over $500,000 was also spent on management and professional fees, and about $120,000, and that's for the 9 months as well for the management. So as well, this $120,000 was spent on rent. So again, for the 9 months, my estimation tells me that the company needs roughly $200,000 a month to keep the lights on and the staff happy and warm. But that doesn't include share-based compensation or options or whatever else. It's basically just the cost as far as I can estimate it. Although you shouldn't rely on my numbers, of course. But boarding slips to the side, there's multiple projects here. There's a relatively large resource base already. All of the projects are in Mexico. I know Kootenay Silver, you'd expect it to be in BC. No, they're in Mexico. But as far as I understand it, the focus is on the La Columba exploration property, which is in the southern end of the Chihuahua state in state. I'm thinking about steaks. How can I not think about steaks on the barbecue? Of course I'm thinking about steaks. Thinking about steaks all day. Anyways, this is in the Chihuahua state of Mexico, southern part of it. So, Jim, instead of me guessing, why don't you talk to me about what the strategy here really is? Again, multiple assets, different stages, exploration, development. There's everything going on here, different focuses. What's going on in Kootenay Silver right now?
So, as you point out, we have quite a large resource base. It's in 3 different deposits. And 2 of those deposits start to look pretty interesting on paper, financial models at slightly higher silver prices approaching $30, over 25 and 30. So those are great projects. They both have good upside in them still. In the case of one, tremendous upside in increasing the size even further. I mean, they total 214 million silver equivalent ounces in the M&I and 54, almost 55 million in the inferred categories. And so these at today's current silver prices are slightly out of the money. So there's lots of work to do on those and advancing them into PEAs and pre-feasibilities and this sort of thing. But you're not going to get the bang for the buck right now. But we've done what we can at the moment to prepare them for a silver bull market. So that's the time to spend money, because then we believe the market will value what you spend and what you add there.
Mm.
And out of those assets, there's Promontorio, which has two deposits on it. Promontorio, which is our original discovery, a large low-grade diatreme system, which is silver, gold, lead, zinc. And then there's the La Negra, which is a smaller breccia system, amenable to open pit, real nice grade for open pit at 100 and sort of 30 to 40 gram open pit grade there, and simple leach metallurgy. And it's a small deposit, but could be quite a high margin one. And then there's La Ciguera, which is in the famous Parel district of Mexico. And what you have to understand with La Ciguera, currently it sits at 51.5 million ounces in the measured indicated, and then another 11.5 in inferred. It's open for expansion. There's lots of room to get bigger. It sits on a structure we can see on the ground for at least 10 kilometers. And then it heads into a valley towards the old district of Santa Barbara, San Francisco del Oro. And down there, they produced nearly 500 million of ounces historically, and they've been mining for over 400 years.
Mm.
And the current mining is going on there is down at a depth of 2,000 meters. And so this is the kind of district that just keeps going and going and going. Once you find something, you get into production. And so, you know, La Ciguera is a very, very interesting project. The current grade is about 85 grams in the M&I category. It's just slightly out of the money at these silver prices. But we've done some geologic modeling that leads us to believe that that grade has been diluted, and we're actually going to have a better grade. So in the first part of this year, with the new geologic model, we're in a position to be able to update that resource, which we will do after our next financing. And so we're teeing these resource properties up for a strong silver market and getting them ready to advance, because they're all great assets.
Right.
And,
Well,
so sorry.
No, I was just gonna say that I mean, it all makes sense, and preparing your projects for a good silver market makes sense as well. I'm also just strategically wondering, what is the focus split going to be going into 2024? I mean, is it 75% La Columba and then the rest gets like, how do you structure that focus?
Yeah, so we've set these resource projects up for a silver bull market, and they're ready. And the focus in the meanwhile is in the new discovery at Colombo, which is a classic high-grade Mexican vein system. It's very exciting discovery. We think it's got potential for 100 million ounces of silver and multiples of that, in fact, because of the size of the vein swarm we see there. We've actually identified what we believe has been an unrecognized new vein system in Mexico, and multiple different veins that we've been drilling, and we've been hitting just some incredible widths and grades combined. And so grade is king, as we all know. And so we're focusing our efforts there. To answer your question about the focus for 2024, it's going to be 99% onto Columba and drilling and expansion there, with the objective of getting to a maiden resource by late third quarter, early fourth quarter of this year, hopefully. And so we've identified already a number of veins where we see there's a resource building. We don't yet have enough drilling and drill density to do that definition. We want to expand on what we have, and then come out with a maiden resource.
What's do you have an idea of what's driving mineralization here, and also just generally, what's your best guess for the heart of the system, where that might be the thing that's cooking up those epithermal veins, basically, which are the cooked up fluids, basically came up and potential, in your case, brought up silver, zinc, and lead mineralization with them. But do you expect that to be on your land package? And if so, where exactly do you think the heart of the system is going to be?
Well, the heart of the system is more or less in the core of our concessions. And what we've got there is geologically very, very interesting situation because the setting is the vein system's sits in a caldera. It's an old volcano, so it's the caldera of that volcano. And so the bottom of that caldera, that volcanic cone, is the erosional low point. And at that low point, you've just barely exposed the top of the veins where they're well developed and start to have significant silver grades. So geologically, in these epithermal style systems, if the whole thing has been preserved from top to bottom, at the top of these systems, you see very little in terms of grade or vein development because you're above that productive zone. And as you get down deeper into the system, you'll reach a level where the vein becomes strongly developed and the grade comes in. And then you'll have a zone in there of which you got really good grade, and then below which, in a typical model, you might transition into more base metal rich and system. And that's the kind of thing we're in. We're in what's called an intermediate sulfidation vein system, and with intermediate sulfidation vein system, that panel, that thickness of productive zone that you can have can be several hundreds of meters of thick, 700, 800, or 1,000 meters in thickness, which gives you a lot of potential at depth as well. So, and in our case, we've barely been eroded into the vein system here. And so we're at the very, very top of this thing. So whatever was originally deposited here is still there, which is quite exciting. And also, it allows us to know, recognizing this allows us to know exactly where we are in that system. Sometimes when you get onto a project, you see these nice veins, you got really nice graded surface, but where are you? You might be at the bottom of your system and where most of it's been eroded away and now is gone. This is the reverse of that. So it's a very exciting scenario to be in. It's like a textbook. We could be running field schools here for geologists and geologic students because it's just a classic setting where they can see right from the very top of the system where you don't even see silver, walk down the hill, get to the bottom, and there's a well-developed vein all of a sudden in the structure and with potential ore grade, high-grade silver sitting there.
Mm. And you're chasing that with, I believe, 25,000 meters of drilling this year, right?
Yeah, we want to do the next phase, I think 20,000 meters, and that's probably enough to get us to the maiden resource. That's our objective. We just finished a small program last year of 3,000 meters where we focused on the D vein and expanded this all step out holes, sort of 50 to 7 meter step out holes there, and focused on the D vein because that's where our biggest intercepts have been to date. We've got highlight intercepts there of 34 meters, a half a kilo of silver, and 17 meters of 650 grams per ton. And then this most recent round, the last couple of holes, were right on the edge of where we've ever tested. So leaving it wide open, both holes hit over 10 meters of over 500 grams per ton, with a high assay inside of that at 4 kilos. So it's just a tremendously predictable, consistent, high-grade, thick vein. And it's an excellent vein. And it's important because these epithermal systems, you'll have a swarm of veins. You can have dozens or hundreds of veins, in fact, of different size and extent. And typically what happens is you'll get 2 or 3 of these veins structures will host the vast majority of the ounces that you have. And so when we're looking at this D vein, which had no historic work on it whatsoever, it looks like it could be one of those zones that make the rest of all the rest of those zones work. And that's very classic in these systems throughout the world, in fact. And in Mexico, there's real good recent examples there, like, for example, Vizsla, where they discovered a new zone and doubled their resource on that one zone. So you get into these particular zones, usually referred to in the industries shoots, ore shoots or mineralized shoots. And you'll have a handful of those that will make up the bulk of your ounces. And then all of the other ones you find can, or no, not necessarily all, but then you've got dozens of other small zones that can be mined because of those key shoots that make the bulk of the ounces.
So if we look at the D vein on the map, I have it here next to me. I'll put it up on the screen right now for people to see as well. But if we look at the D vein, where in relation to it, where on the land package is the 20,000 meter going to be spread?
Yeah, so the guys are just working on the specifics of that program now, but generally we'll probably see at a 20,000 meters, 50% of that on the D vein, just expanding it to the southeast, which is to the lower right of the plan map, or to the right-hand side of the longitudinal map. And so it's wide open in that direction, heading towards another structure that's got some very nice widths and grades in it called the B veins. And they intercept approximately 800 meters along strike from the D vein. And so about 50% of that 20,000 meters will go into systematically drilling fences to expand the size of that D vein as it travels towards the B. Then the remainder will be on step-out drilling on the B vein in a similar manner, where we've got intercepts like 4.5 meters of almost 1,200 grams per ton, for example. So we want to start defining that. It's very lightly drilled at the moment. And then we will be doing some drilling on the F vein, mostly infill, because we already have over 50 holes there. And that's the vein that had historic work on it done in the past. In the early 1900s, there was a shaft put down 200 meters and then 5 tunnels put off of that shaft. And then that operation was shut down by the Mexican Revolution. And so they'd done a little mining before that. And then around 1960, a private consortium came in and did a little bit of mining for 2 years. And then when we came into the property to have a look at it, nothing had been done in over 40 years there, or I think it was 35 years. Nothing at all had been done in terms of exploration. So, and what attracted us was the assay records from the tunnels of this old mine, which showed some very high grades and quite consistent along the vein. So it was flooded. We couldn't get into it to test it directly, but with some old assay records and some old smelter return records, we could go out and sample the tailings that were at surface and back calculate what they said their recovery was against what the grade in the tailings was, and it matched. So we had reason to believe that those records are accurate. And so when we went in and we went ahead and picked up the option to earn 100%, then first thing, of course, we did was go in and drill across that F vein, and it's certainly shown to have those grades, and it's very consistent vein across 700 meters of strike length, down to 200-meter depth, still open to depth. There's some areas look like they're pinching off there, but it's still open to depth. But there's intercepts of I think about 1.6 or 7 meters of over 2,000 grams per ton still open to depth there. So some of our drilling will go into infilling the gaps that we have there to get enough density to do a resource, as well as to better define those areas that they mined, which is mostly on the western end, it seems, of the shaft. So the program will be some infill on F vein, step out on the B vein, and then about 50% of it stepping out on that D vein, and then probably after that some additional infill and definition drilling for the resource. I'm just going to move out of the sunshine. The sun's coming up here.
Don't worry about it. It's a good sign for 2024. It's the year of the dragon. But so we are expecting grades and widths simultaneously to pick up a depth. Is that right?
Well, what you have there, if you envision the volcanic caldera like that, and so what you see at the bottom is just the beginning of the well-developed part of the vein where you're starting to see the silver, and then those veins continue out laterally along strike. But as you go up that hill, you're above the productive part of the system. You really don't see the silver, but when you're up on the hill and you drill down to that level where it starts, which is about 1,700 meters above sea level, you drill down along to that level and bang, you're picking up your grade. As a rule of thumb, you want to be around that 1,700 meters above sea level, and that's where you have well-developed vein, and that's where you have high grades of silver start. So you want to get to that level, and laterally, like for example on the B vein are wide open along strike and the depth, and so you just want to then get into that zone and then systematically step out laterally like that. And the D vein we've drilled from surface, from the surface topographic high, about to a 300-meter depth on it, and the deepest hole is, I think, still that hole that's 34 meters, a half kilo, still open to depth. But we really don't need to go a whole bunch deeper on this next round of drilling, because we can just go we still following it laterally along strike sideways. It's still wide open. So we need to close it off in that direction, and then we'll start to go deeper.
Okay. What is deeper mean for you? I mean, how deep is that? First of all, how deep is that 700-meter above sea level? And then when you start going deeper, how deep do you chase it?
Yeah, so it depends, because you're in this volcano, so it depends where you are in the topography. Some holes will be deeper than others, but our holes will vary. To be able to hit a good silver zone, they can vary from 150-meter deep drill hole, so vertically down maybe 80 meters, to holes that'll be 350 meters deep or 400 meters even, and vertically down from the drill collar 250 meters vertically.
Well, why I'm asking this is because I'm just trying to figure out how much that drill program totally is going to cost you. So talk to me about that. How much money in total are you spending this year or budgeting for this year, and how much does it cost you to drill a meter down in Mexico?
Yeah, so for 20,000 meters all in, you're going to need about 5.5, 6 million Canadian.
Okay.
To do it all in one go.
So that's about $300 a meter.
Yeah, that's all inclusive. That's your assays, your geologist, the camp, the whole thing.
Are you sending the core up to Vancouver for assays, or where are you assaying?
Yeah, so we cut and sampled it right there at site, and then send it into a prep lab in Ciudad de Chihuahua, the capital city of Chihuahua. And ALS Chemex out of Vancouver has a prep lab there. So they'll crush it into a pulp, and then they'll send the pulp to Vancouver for the assaying.
Okay. So, it's a quicker turnaround, I assume, because they're doing it themselves internally, so there's less bureaucracy. How long is it going to take you to turn around assays?
This year we were seeing assay turnaround of about 3 weeks. So
okay,
pretty good.
That's good. Yeah. When's the drill program start again?
Well, we're looking to start in February, probably late February, third week or fourth week of February. And we're going to we need to finance this next round. So we're going to be doing that, a round of financing. And then as soon as we have that done, we're ready to go. We're ready to start.
Oh, so you're going to be financing before you have, because how much money do you have left? Like $2 million-ish?
Before we start drilling. No, we're about 1 million, just under 1 million right now.
Oh, okay. Okay, well, so yeah, you're gonna need money before you start drilling.
Yeah.
That makes sense. But then assay results, what, early April? Some of the first assay results, is that reasonable?
Yeah, early April is pretty reasonable. If you get a late February start, um, yeah, you'll be
Hmm.
early April is
Right.
realistic.
Okay. Well, so then basically, what happens in the meanwhile? Because so February, you're gonna be looking for money in February, and then let's call it March. You're gonna be drilling as April. The first results start coming in. What are you doing in the meanwhile in January?
We're prepping for that drill program.
Hmm.
So when you're asking about, you're trying to get an idea of sort of with that meters, how many holes, how deep. So the guys are on the ground spotting the hole locations exactly, looking at where the best locations in a practical sense are, and then calculating, yeah, and then from that constructing all your cross sections and just calculating exactly what those holes are going to look like and how many meters it's going to be precisely, and how many holes, where, what each hole depth is, what the target is, and then at the same time you're prioritizing those holes. So there's certain holes you want to do first, and other holes will depend on what you see on the first bit of holes. So that all of that, that's the kind of work that's happening now, and then modeling those veins in 3 dimensions to get them as understand them as best you can and predict them as best you can at the same time.
Mm, okay. In terms of news releases, do you have something? Are you expecting something shortly before the financing?
Well, we'll have a summary. We'll put out a release just summarizing the results from late last year
Mm,
and what the plan is going to be, just to refresh everybody's memory about what we're doing. And then that, I mean, that'll be it, because we put the last of our assays we put out in, I think it was December, the last of the holes.
right, right. Okay. Well, so where I'm coming from with this is that it's generally not fun to finance at these levels for most anybody. You're actually in one of the better positions because since October you've gone up what 50% ish. So you're in a better position probably than even after the split. That is, I think I'm
Yeah.
accounting for it properly. But so it's just generally not fun, and so I'm thinking about financing and getting money, and that's also getting me thinking about would it be an option for you to monetize maybe some of the other assets in order not to have to raise as much capital at these levels? Because I mean, I'm not sure if the market is giving you any value from the updated MRE that you have. So yeah, I mean, would you consider selling, optioning, doing something to get money from those assets?
Yeah, oh yes, we would. But we would hate to do it in this sort of market environment. You're not going to get much for them at the moment. But that's something we would consider in advancing those. The preference actually would be to monetize them when we're into a silver bull market. And in the meanwhile, keep financing the Columba. But it's never out of the question. At some point, there's going to be an appetite for doing deals. People are going to be wanting good silver projects. So we've got an open mind to that.
Hmm. But just not right now.
Not right now, no. And a lot of the, um, let's say, a good number of investors who invest in us are in it for this leverage of the silver price.
Hmm.
So they'd really hate to see you monetizing an asset at what is the bottom end of the silver market.
Hmm. Well, let's hope that last assumption is right. I know a lot of people are looking forward to that final bottom, but the bottom seems to be bottoming for like 3 years now, and so it's painful. But what is this may be arm waving, and you probably want to see what comes out of the ground this year, but what happens after that? Are you aiming for a PEA in 2025? Do you keep growing and do an updated MRE, or like what's the strategy for
Yes.
the longer term?
Yeah, that would be the process. So we get an MRE out, and that you want to have a resource that's substantial enough. The next step is to expand on it and get into a PEA,
Hmm.
and then from there you get into a pre-feasibility. So if you look at some of our more advanced peers, that's the process. Get get a maiden resource out there, and then, hopefully you've got lots of expansion potential. You continue growing it. You do an updated resource, preferably along with a PEA, and then you continue the process of the next step of continued technical and drilling work to take it to pre-feasibility and eventually definitive feasibility. And the overall objective is to sell the project to a mining company at the end of the day.
Well, talk to me about that. What's your best guess at when that's going to happen? Maybe not necessarily in time, but just generally on the Lassonde curve. Does it happen at the PEA stage? Does it happen at the PFS stage? When do you think this thing is sellable?
Yeah, preferably as early in that curve I mean, in the process, not the curve, but in the process as you can get. Typically you're having to take these things to the pre-feas level these days, to get to attract that. There are exceptions, and depending on if the resource becomes exceptional, it may go a lot quicker.
Okay. Yeah, I've heard you compare yourself, compare La Columba to Panuco, which is a Vizsla silver project again. I also believe I've heard something about Las Chispas, which is I think it's a Silvercrest mine, I'm pretty sure. How many years would you say you're away from either of those respectively?
Well, Las Chispas is that when was that first discovered? 2016, 2017, the first holes, but it's a producing mine today. So you're correct. It is Silvercrest. And then in the case of Vizsla, they've been on to their discovery for
3 years-ish.
3 years. Yeah, I think, about 3 years, a little more maybe. And so we're probably, I'd say, 2 years behind Vizsla. And we want to get our MRE this year and then get into the PEA stage immediately following that. So that's where we are. And when we compare like to Panuca or Las Chispas for that matters, what we're looking at is they're all classic Mexican epithermal vein systems. And so we're looking at the physical footprint of our vein system compared to what they have to give us an idea of scope potential. And so when you look at the physical footprint size, and that's on our presentation, we're of the same sort of dimensions. Our vein system, we have traced at 4 kilometers in one direction and 3 kilometers in another, and that's of similar size to those two projects. And so they're both, case of Vizsla, the last resource is over 200 million ounces now. And then in the case of Las Chispas, I'm not sure, but I think it's around 140 million. And then there's around 80 million in the reserve category currently. So, we certainly have the scope of size for 100 million or multiples of 100 million ounces of silver. That's the kind of one of the first things you look for early on in exploration. And when we first came to the project, it didn't appear to be quite that big. We were interested in it, and the reason it really wasn't recognized for being as big as it is because it's barely been eroded. So what you see, most of what you see at surface is the very upper levels of your system that are hard to recognize because there's in some cases, no vein at all in the structure, but you can actually map the structure. But when you sample it, you're lucky to get 5 grams of silver. So you're just too high to see it, but it's there when you get down to that 1,700 meters above sea level point. And so, that came to be recognized over time. And then that combined, of course, then the drill results, the truth machine, and just the incredible hits that we're getting, multi-meters and high-grade intercepts. Very consistent, and particularly in that D vein area, that that really drives it home, what your potential could be. So it becomes very, very exciting when you start to see that in the drill core.
Mhm. But I assume vein density matters too, though, right? Because Vizsla is deposited it is very concentrated. Like, although they have many dozens of veins basically that are very close to each other. Um, if I'm not mistaken, I mean, is that what you're seeing too?
Yeah, we've got a lot of different veins, a lot of different sizes. There's a lot of small veins. There's some very big, persistent veins. Ones we can individual vein structures you can follow for 4 kilometers, for example. So it's just another classic vein system. And density is not really the key factor. It's just getting those persistent strike length, persistence to depth, and the bottom line is the grade and the volume going to be there. So that's the grade and width.
Hmm.
And so when you start to see in your drilling, you're hitting intercepts at 34 meters, a half kilo, 16, what was it? 650 grams per ton over 17, 18 meters, that kind of thing. The true width being sort of 10, 9, 10 meters. Those are big fat zones. And a lot of what's mined on these vein systems are sort of 1 to 2.5 meter widths. So
Hmm.
when you start to see those widths with the grade, then you've got the potential for building a lot of ounces.
Hmm.
So that's really what you want to see, or those drill intercepts.
Right. Well, width and grade variability is also a thing in these systems, as you mentioned. Is sometimes they go from 1 meter to 10 meters. So how do you deal with that in the exploration process? Is that even in the back of your head? Are you thinking about grade and width variability, or is it too early?
Well, yeah, you are, and that's a matter of drilling. So drill density. So you just need a lot of holes to define exactly what you have there. And then when you're seeing, like, the F vein is very consistent, but it's narrower. And the D vein is very consistent and it's got excellent widths on it. So it's much wider.
Hmm.
So that's where the focus is in expanding that the D vein. Well, the F veins, we've already kind of defined the strike length on it. So you just continue to drill. And that's where you need to get enough density to have confidence of what that variability is from hole to hole. And thus far, we're seeing very consistent veins. So, and that, I mean, that's the process. First, you do the exploration, you do wider space drilling to define the edges where the grade is. And then you'll have to come in and infill with more density to get the confidence of what the volume and grade averages out at.
Hmm. Okay. Okay. Good. Well, I think I'm getting the gist of it. Obviously not a complicated story. You've got one focus and you're going for it. You told me it's going to cost you about $6 million. You have how's that? I didn't ask you that. How's G&A right now? What's it coming up to?
Well, with the drilling going on, we usually go through about, well, it depends how many drills, but we got a staff in Mexico of about 5 geologists down there. We've got an accounting and office manager. And so we are around 200,000 a month on G&A.
Mm. Okay. Well, so to get you through that year, if you have $1 million now, you need 6 for drilling. You're probably looking to raise what, 6-7 million bucks.
Yeah, that's for the 20,000 meters. Yeah.
Yeah. Okay. Good. Well, how many drills are you thinking? Because you said it depends on it. What is it? Does it depend on how much money you get, or?
Yeah, it'll depend on how much money you get. So if you're doing the 20,000 meters, I think we'll bring in 3 drills, maybe 4.
Okay. So it's going to be quicker. If you bring in 4 drills, when do you think the program is going to be done? Starting, let's say, beginning of March.
You'll be done midsummer.
Okay. Midsummer, and then the rest of it is basically assays and again prepping for then 2025, which might be infill drilling for the PEA.
Yeah.
Okay,
Yeah.
sure. Well, that makes sense. Good. Jim, I think I'm getting an idea of it. Is there something that you came here hoping to talk about, but I'm failing to bring up?
No, that's great. We wanted to talk about project and the company, and we have.
All right, last but not least, Fission Uranium. I suppose a company that needs no overview, no introductions. I've interviewed Ross probably half a dozen times. Actually, probably more than half a dozen times already. They are the largest company in terms of market cap for today's grill, barbecue, whatever you want to call it. It's 800 million Canadian dollars in market cap, and they are listed on the main board in Toronto under the ticker symbol FCU. They've also been very active on Twitter recently, and Ross, I'm talking to you. You've done a Meet the Team campaign showcasing that you've actually taken on a team of what I can describe as mine builders. You've got mine engineers in there. You got people who look to, it seems like they know and have built mines before, well, have helped build a mine. Nobody builds a mine on their own, of course, but this may have come as a surprise for some or even many based on what I could find out there, because the consensus seems to be that there's no way for Fission or for your next door neighbor, for that matter, NextGen, to build your own mines, right? So people are saying, I even spoke to Rick Roll recently. He says he's got a hard time seeing how Fission and NextGen built their own mines, and he's a big fan of your guys' deposits, both of those, and he thinks that it'll take a BHP or a Rio to come in, a large diversified miner to come in and take you out together and then build the required infrastructure, the mines over there, because of the size of the capex, basically, and the general size of this undertaking as a whole. But then yet again, you're building your own mine building team, if you will, to get a little bit meta here. But so how do you think or look at the statements like this? How do you look at it?
Yeah, I mean, it's a good question. I think it's true. There doesn't seem to be a major involved in the Athabasca Basin other than Cameco, and Cameco really haven't been active on new project development. They don't own a piece of any of the the up and coming developers. So the way I view it is that it's until otherwise, it's going to be the job and the duty for for us developers out there to build mines, and I think we can do it. I mean, if you look at Fission, for example, I think we've assembled the strongest development team out there. It's really all about the people that are backing the projects, and if you look at our development team, we've throughout 2023. We've put together all the key positions, and the experience that the team has is tremendous. These are all ex Cameco or Rano or significant uranium miners. So a great deal of experience in mine development on the permitting side, on the processing side. So I think we've got a team that can build a mine. We have an asset that absolutely begs to be developed and put into production. So I'm pretty sure we can do it. I think the other developers are very strong as well, and they certainly have world-class assets. They seem to be making exceptional progress as well. So I don't know quite how the future unfolds, but I think it's clear that these projects will get developed. Does a major step into the game from somewhere? If they are, we're maybe 2024 will be a big year when we start to see some influence on some of the major mining companies involved in uranium. It's certainly the hottest sector out there. It's got the most legs going forward, and we'll sort of see where it all goes. But we're ready, prepared, and we will build a mine at PLS.
Well, that's very clear. And I believe also where this might be coming from is because you don't see that often. We don't have, and I spoke to Lobo Tigre about that very recently, but you don't generally have a lot of companies that every year that enter into, that last stage of development. He calls it a pre-production sweet spot. So I think that's where it's coming from. And if I think about the majors in uranium specifically, we basically have three, right? We have Cameco, as you said, they're vertically diversifying. They're going into a whole nother direction. It seems to be working out for them too, and the shareholders like it, so good on them. Then you have Kazatomprom. They have their hands full with whatever they are doing. They can basically, they're trying to go to 110% of the subsoil agreement, which is not going to be an easy feat either. And then you have someone left, the China General Nuclear, the Chinese basically. They're also a large shareholder of you. Do you believe they would be allowed though to partner any further with you beyond what you have going on right now? And if they were allowed, would you even want them to?
Well, and I think you're also missing another major player in the game too, which is Orano. So that would be the French
Sure.
utility as well. And they actually have a presence in Canada. They have an office in Saskatoon. They have been mine operators in the Athabasca Basin. But specifically to get to your question on the Chinese, I look at them right now. I see them as passive investors on the PLS project. You know, they own a what is it, you know, roughly a 13% equity interest in the project. And of course, we have an offtake agreement with them. I don't see them being a major builder of the asset. Ultimately, what they want is to be able to have a connection, access to production once we are being a producer. But I don't see them being a larger equity stake owner in the company. And really, you know, their track record so far is they've actually diluted from their original ownership of the company at 19.9% to now just under 13%. And they have not sold any shares in the company. It's just that they've not participated in financings along the way. So I don't see them, getting a bigger piece of the equity position of the company. Would they be allowed to be take over a company like us? I don't really think the Canadian regulations would allow it. So I think we'll just, continue to see them as a passive investor in the company, and ultimately, they want access to the production once we are up and operating. But maybe I think that's really, the position I see for CGN.
You think that's what they're mainly after, basically the natural uranium that comes out of the ground there eventually?
I think that's their full attention. It always has been. I think it's always been clear to me that they're a consumer of the product, right? They're still the world's fastest growing nuclear fleet right now. They're still the most important player, and I think in the decades to come, well, I mean, it won't be long before they probably overtake the U.S. as being the number one country consumer of nuclear product. But and they're really all about access. I don't think they care so much about owning a company outright. They just want access to uranium to be able to feed the nuclear reactors, of which they are very aggressively building out.
Okay, well, that's clear. Are you seeing anybody else in the Western Athabasca Basin? I mean, just when you're there, are you seeing cars with Rio Tinto logos driving around, or like something else that you're seeing that we are not?
Well, a couple of years ago, Rio Tinto were phasing out of the uranium sector, right? They were selling their assets worldwide, uranium assets, and even the projects they had in the Athabasca Basin, they were selling as well. So, maybe it's just a function that sometimes the majors get caught in the wrong side of these cycles. They're selling assets at the time when they, probably should be buying, but you can never count out their ability to turn around and take a great interest in the uranium sector. Don't forget, when they were unloading or selling their assets, that was at the tail end of almost a decade long, what do we call it, the lost years in the uranium sector, when the price was very low. And these decisions are not taken lightly, I think, by the majors, but they can also rebound and come right back into the sector again. So Rio, it's hard to say. I haven't seen them too active, at least not on the uranium front in Saskatchewan. But they are still a presence in other commodities in the province of Saskatchewan. I think another player that I think people may want to pay attention to, and we'll see what happens, BHP. So obviously they're very, very comfortable being in the province of Saskatchewan. They publicly, I've heard their CEO talk about the virtues of the province of Saskatchewan. They're big, obviously, in the potash business there, and really set up a significant shop there. But they love the jurisdiction, and they're in multiple commodities, and including uranium. With Olympic Dam, they as a byproduct, they become a uranium miner as well. So you might see the likes of BHP take an interest a bit more in the Athabasca Basin. I think that's certainly possible. And who knows? I think there's an opportunity for a number of different majors to get involved in the uranium sector. We haven't seen a lot of nameplates of trucks driving around and other major companies like that, but 2024 may be an inflection point where we do start seeing the majors get involved in some of these world-class assets.
And that will make sense to me, especially given what happened in 2023 within the uranium market, specifically the uranium spot price, but also the offtake agreements that were signed, some of the RFPs that were basically ignored. The RFPs coming from large utilities, the major utilities, basically the Koreans not getting any reaction to them. Has any of that changed your timeline outlook for the PLS as to when you think it will be brought into production, or are you just going as planned?
We're going as planned. I think it's important for us. I think as we've seen particularly started in 2022, but really accelerated in 23. The geopolitical winds of change are I think absolutely demanding that the North American assets get developed, and the sooner the better. But none of these things happen overnight. They take a great deal of time to be able to take a project such as ours and get it to the point of production. I mean, even still, we're what would we be? A good 5 years out, I think, before really being a producing asset. Two more years until the beginning of construction. 3 years. I mean, that puts our timeline, 2029 before we could be a producing asset. And I think that's probably true for the other developers as well. Maybe plus or minus a year but there's nothing coming on stream immediately, and nor can it. So I think it's important for us to keep our head down and continue to go forward. And I think the time 5 years from now, when we're in production, I don't see any reason to be adjusting those timelines. I think that's achievable for us, and I don't think we can do it any quicker than that.
You're one of the few people, again, who's actively in the process of building a mine. So you're probably one of the few people who have the most recent experience with actually building going through the regulatory process of building a uranium mine. Do you think it could be done quicker? Like, could we see sort of a flooding of the uranium market from an unexpected angle?
Not in Saskatchewan. I think the timelines are pretty clear. It's really at this point, the timelines are set in stone, more or less, from the government, from both the provincial and the federal government. So unless they change, their timelines, how quickly they can review projects and go through their approval process, that won't change. So I think we understand those timelines. As I say, we're for us, just to get a little bit more specific about it, we expect to have provincial approval for the project in 2024, probably in Q3 24. But it's still approval is required at the federal level as well. So you've got the province and you have the federal likely another 10 months or so behind the province. So it really wouldn't be before mid 2025 before we would expect to have the federal approval from the CNSC on the project too. And I think that these timelines are really the same for all the developers.
Yeah, those are, well, that's why this is called the boring part of the Lassonde curve, right? Because you basically have to sit around, wait for the papers. Not specifically for you though, because in the meanwhile, you're going to be drilling. You're restarting exploration drilling this year. Well, soon, I assume. When are you starting? Because you have to start in the winter, so I assume this month or even next month.
No, this month. In fact, I think by another 10 days from now, our drills should be turning at PLS. So we're really expecting to kick off by January 15th thereabouts. So no, the guys are already busy preparing and getting equipment up to site. Yeah, it's going to be an exciting year, and we've got some tremendous targets on the PLS project, and so we'll it's going to be exciting. So yeah, you're right on the Lassonde curve where we sit at the development side is there's a bit of a lull in that. Well, not a lull in activity. I mean, it's really the permitting process and front end engineering, but the real, I think, some of the news and catalysts that we'll see will really be driven by the exploration activities. And and I think when you look at our targets and what the potential for further incredible discoveries at PLS, I think they're very realistic.
We spoke about that last time as well, and I'm just hoping that the market is going to give you some value for that, because it's hard to get value for just about anything in the market right now. But again, I suppose it's also going to depend on what comes out of the ground, of course. How many drills are you, because you said the guys are moving equipment, how many drills are you going to have active?
For exploration, we'll have 2 drills active. So, first we'll be testing 2 targets at once. So one target or one drill dedicated to one target and another one on the other one. Now, we detailed in early December, I think it was the first week or the second week of December, we put out news on the exploration program and what the plans were. But there are 6 discrete target areas along the Patterson Lake corridor itself, which is a extremely prolific a corridor that's that hosts the Triple R deposit for PLS. It hosts the Arrows, the Arrow deposit, next gen's Arrow deposit. So this is an absolutely world-class prolific corridor, and we have a number of key targets on our property that we want to be testing. And so 2 of these targets will be tested in early January, and this program will continue through the winter up until likely mid-April.
Do you still think there's room on the PLS corridor for the type of discoveries that we've seen already, or whatever you find right now is going to be sort of smaller? Do you expect it to be smaller, or is there room for it to be as large? That's basically what I'm asking.
Well, I think that there's a lot of optimism that you can find bigger deposits even than what would have already been outlined. I mean, if you look at the very, very prolific Patterson Lake corridor itself, and you look at the major discoveries found so far, forgetting about property boundaries, but it's almost every 3 kilometers we have a new significant discovery along the corridor. We start on the southwest end with the Triple R deposit. You go about 3 kilometers along trend, you have Arrow's next gen's Arrow deposit. You go another 3 kilometers along there, and you're at the Arano Cameco Pierpoint joint venture, which is a Spitfire zone. And these are all well mineralized bodies. There's no deposit yet at Spitfire, but I think that's due to a lack of drilling more than anything. But that's a different issue. But I do think that that corridor is ripe, so we can continue going along that trend length and find world-class deposits such as Triple R or Arrow. I think there's plenty of room for those kind of deposits along the Patterson Lake corridor.
Do you know what's driving mineralization there? You don't, because nobody does, but you probably have your own opinion on what it could be.
Well, yeah, I think we got a pretty good idea. It's why we staked ground there in the first place. We think that the conditions are ripe overall on the macro scale for hosting, having high grade uranium. There's plenty of uranium discoveries on the west side of the basin. There will continue to be a lot more. I think that the western side of the basin is equally endowed with uranium as we've seen on the eastern side. It's just a lot less mature in exploration. And if you look at the amount of pounds that have come out of the eastern side, and it's dominated mining in the last 50, 60 years in the Athabasca Basin. I think the whole western side of the basin is going to show a distribution and potential of deposits overall that are going to equal anything we've seen on the eastern side of the basin. So there's plenty more to be found. I mean, not only on our PLS project, probably on other projects as well. I think these discoveries will continue. So I'm extremely optimistic about what's happening out on the western side of the basin. I think we're in the really, really early stages of exploration out on that side.
I want to touch upon on that specific statement just in a few seconds, because I have two more questions on that, I think, or maybe three. But you're not drilling as deep, though. So I don't assume you're looking for the next arrow. You're hoping to find the next triple R, then, I assume.
Yeah, well, I think one of our targets we're really quite encouraged with. It's on it's just to the north on parallel conductors to that which hosts the triple R deposit. We're testing the next northern set of conductors, and there we would actually be looking a little bit deeper down than the triple R. So probably more analogous to Arrow, where the Arrow deposit is situated on the Patterson Lake corridor, which is, the bulk of the ore body at Arrow is about 500 meters or so below surface. 500 to 600 meters, 550. Anyways, that's really the target depth that we're looking for on our northern conductors on that, on our target area too. So I think that so it isn't all shallow like the triple R deposit. I think we have the potential for hosting deposits at depth. It's just a matter of being able to understand the stratigraphy, where these things occur, and the structural controls. And I think, with our team that we've assembled, I think we've got, probably a better understanding than just about anybody else and what controls a deposit, what depth, where they would be located. And, having said that, this is why I'm convinced that the PLS project is still the best piece of real estate in the entire Athabasca Basin for the potential for hosting another world-class deposit. So I'm really quite excited about the program coming up.
Are you going to be releasing every hole that you're going to be drilling, or how do you deal with announcing assay results?
Typically, in exploration programs, I mean, everything gets announced, but maybe not at each hole each time. There's not an announcement per hole. We'll batch. Quite often, you'll batch results. Now, if you do make a significant material discovery, I would, announce that right away. So if we're, at any point in the program, if we make a discovery of high grade mineralization, you can assure that we would be announcing, those results almost, immediately. But they are material, and you want to be able to disclose material information. And of course, a new discovery would really change the whole focus on where we're exploring too. So we do have a number of targets to be testing, and we will be testing all of those targets. But there's always potential to ramp up exploration as well if we do find ourselves in a new discovery.
What's high grade, by the way, for you? Because that's sort of a relatively vague term in the basin. Some people would say 0.2 is high grade because it's high grade on a world level. But yeah.
Well, our cutoff, by the way, on our ore bodies, 0.25%. So you're right. What's considered high grade from a number of deposits around the world doesn't even make our cutoff grade. What I kind of look at high grade as being a percent or so U3O8, and from the scintillometer results, so the radioactivity that we measure right away in the drill holes. I think typically once you're in numbers that are greater than 5,000 counts per second, that starts to get quite interesting, and I think you're approaching mineralization. We'll start seeing the high grade type mineralization where you're a percent or so higher U3O8 with equivalent scintillometer results of 10,000 counts or more. I think if we see anything that's approaching 10,000 counts and higher, there would be all kinds of reasons to get excited.
Do you think you're gonna have to redo the PFS or even do a separate PEA if you find something like that?
No, I think the feasibility study stands on its own, and it's a mine development program. The permits are really all about developing the ore body, the triple R ore body that we already know. I think but there's also room for expansion. You can grow a resource and continue it in the same feasibility study. They're on it. It maybe depends, Antonio, on where the deposit's found. I mean, the PLS project's quite large. It's 31,000 hectare land. If you're nearby the triple R deposit, if it's inclusive of the same deposit, if we would call it part of the same deposit, I don't think you would change anything. If you were probably 5 kilometers away on you might, you'd go through the whole process there of building a new resource estimate, and then you might try to include it eventually into the mine plan. Of course, you would do that, but these things take a lot of years, as we've already seen. From discovery to get to the point of an economic decision is a multi-year process. So it's nothing that happens instantly anyways, but it really depends on the proximity of where mineralization would be to the overall triple R deposit.
Right, because that's exactly what I was wondering. Because sometimes companies, if they make a new discovery, would make a separate PEA, treat it as its own thing. But sometimes they would just start mining basically, and then know, okay, we have mineralization there, so we can go there and just use it as mill feed basically.
Well, I think any of the target areas that we're exploring, at least in the winter program, if there was a discovery on any of those, they would fall within the same, it would have its own incremental resource growth story, but it would be part of the same mine plan.
Right. Okay.
And you're right, and it would be, a new discovery would be incremental feed into the mine ops. So all of these, the target areas that we're testing right now, would be reasonably close to the triple R deposit and the main operations, and you wouldn't have to really consider separate infrastructure.
Less permitting too.
Yeah.
Yes.
Correct.
How many meters are you getting out of a drill? But what I'm asking here is, you're starting drilling mid-January. When are the assays going to come?
Well, it's sort of a two-phased approach with exploration. So because we measure radioactivity right away, right at the drill site, basically. So when core is coming out of the ground, you measure radioactivity. You do downhole probes. You get a real sense of what mineralization could be. The assays tend to follow several weeks after that, because there's a whole process to looking at the core, cutting the core, sampling it, sending it off to the labs, turnaround in the labs to give you results. You're probably anywhere from 6 weeks to 8 weeks behind the drill for the assays. So 2 months, we'll say, would be a reasonable estimate behind drilling to get the assays. But we get a pretty good confidence level just based on radioactivity and knowing what would be considered mineralized versus not. But assays, you won't start seeing them until March, sometime in March.
Okay. Yeah. Well, and then again, depending on what you find, it's going to depend on how you're going to batch those results and then
Correct.
release them. Okay. How much
Yeah,
how much money?
typically, maybe I just want to finish off on that part, because you were asking, about how do we do the releases and batching. So I say, I mean, if we have results on a single hole, we'll announce those if there's significant results. But if typically we'll look at probably batching 6 holes or so at a time. I think that's almost normal.
Okay. Good. How much money are you spending in total again on that program?
Yeah, so last year we raised $9.2 million of flow-through money, which is all earmarked for the exploration activities in 2024. The winter program itself, the regional exploration drilling, is about roughly half of that budget. So for around $4 million or so on the winter exploration holes. And then also considered as part of exploration is the infill drilling on the R1515 West zone. So there will be another 18 holes or so into the 1515 West to convert the inferred resource into indicated. Now that's another roughly $4 million or so of the exploration budget. And that program is earmarked for later on in the spring, so more like May, June type drilling. So really the $9 million is for the first half of the year in 2024, and based on results, we'll see what the exploration program will be like for the summer and fall programs, but that's yet to be determined.
Right. I'm also not hearing anything about the recently staked ground that you did on the eastern side of the basin. And that's what I wanted to ask you before, because you told me you're very bullish on the western basin, but then so why go and stake in the eastern side?
Well, I'm also an opportunist, and if I see some land available in the Athabasca Basin that I think has some potential, it's very inexpensive to stake ground. It's a lot more money, obviously, to work it and that's there. But if we think that we have ground, look, I'm a believer in the entire Athabasca Basin. I do think I'm focused on the western side, and I think that is where the new, the new mines obviously will come from, and that will be the dominance in the I think in the next decades going forth. Doesn't mean that there's still nothing yet to be found on the eastern side of the basin. And I think you can look at the track record of what Denison's doing at Wheeler River, what ISO Energy have at the Hurricane Zone over on the east side. There's still discoveries yet to be made over there. And so I think if we see, land potential there, it's, something that I can stake. And I think it has it's in a reasonable neighborhood. We'll do so, but none of our exploration plans for at least the first half of 2024 are going to be looking at anything outside of the PLS project on the western side. So yes, we do have 2 other properties in the portfolio. We've got the West Clough, which is north of PLS, and we have the over on the eastern side, in the Larock, in the Hurricane area of ISO, we've got our property over there that we won't be looking at doing any exploration, I don't think, in 2024 on either of those 2 properties, but that may change in the latter half. Certainly not this winter.
Would that be open for doing anything else with that land? Or like if I came to you tomorrow and I say, hey Ross, uranium's moving, I want to start my own company, can I have that? How do you option it to me? Do you sell it to me? What do we do?
Absolutely. Yeah. I mean, these are I wouldn't call us a project generator. We really don't have that many properties to do so, and we've been focused on the PLS. But having said that, if there were joint venture opportunities for other people to come in, spend their money on our properties, I think that's always a business opportunity we would look for. We've been very successful at that in the past. I'm always happy to entertain those ideas. I don't think you have to do all the work yourself on all the properties. I think it's quite often a good business opportunity to be able to joint venture them off, or if somebody was interested in purchasing it outright, well, that's also another business decision. But we'd be always open to those sort of opportunities. But we are focusing really all of our attention, at least at this time and space, on the PLS project.
I still don't think you necessarily have to, if I'm not mistaken. So you have 9.2 million flow through, but you have the ATM facility as well. So you don't necessarily, I mean, you're not in need of capital right now necessarily, as far as I understand it.
We're not in need of capital, and just 1.2 on the ATM facility. So that's closed off now. That's completed. That was done and expired in December of 2023. We have $74 million in the treasury right now, which is sufficient capital to on the development side to take it to the point of construction. As I said, for our exploration dollars, we treat them separately, and if we expand our exploration beyond the $9 million that we're spending this first half of 2024, I'd be looking to raise additional funds, exploration focused funds,
flow through
flow through primarily.
Yeah. Okay. Yeah. How much money are you budgeting for G&A this year?
For G&A, we're looking at about $4 million, anywhere between $4 to $4.5 million for the calendar year. Now, every year our G&A budget has actually come in less than what I budget for, so we're very prudent in how we spend and what we approach. I think we're realistic when we set these things up, and anytime I can reduce our costs or really control them, we do. But I think that if we target between $4 to $4.5 million in G&A and come in less, as we've shown that we do every year, I think that's a pretty reasonable target. That's and that well, I mean, G&A is a pretty inclusive number for all the staffing requirements and anything corporately related, as well as investor relations and public relations. So that it would include all of those costs. So, what does that translate into? About $400,000 a month, or between $350,000 to $400,000 a month.
Right. I don't even know how you do it, because a friend of mine told me that it costs about $5 million to put your logo on a sports car. So I'm not judging. But what are you budgeting for a US listing in that $4 million or yeah? Yes,
we are, and we are looking for a US listing. I'm pretty sure that'll be it's one of the something that we do want to achieve in 2024. I think the US listing makes a lot of sense for a company. For us right now, we're an over 800 million plus market cap company. I think we understand the US market is huge. It's 10 times the size of the Canadian market. I think companies tend, at a certain size, tend to be rewarded for being listed in the US market. So, a NASDAQ or NYSE major listing, I think, is certainly in the cards for Fission in 2024.
How much does that cost? Any rough numbers that you can give me?
There's the whole filing and listing costs, legal fees in the whole thing. I think you would certainly, for the entire process, you'll probably be looking between $500,000 and $1 million.
That's a one-time fee, a one-time package thing to list, and then every year it's costing you something, I assume.
Yeah, it costs something, in the roughly I don't know if I have my numbers exactly right, but about $150,000 to $200,000 a year, roughly in the continuous maintenance fee of a U.S. listing. But it's heavy, obviously, in the first part in putting it together. There's a great deal of legal fees involved in with a U.S. listing as well. So those are all one-time but setup costs.
Right. That's not cheap. I had another company list on, well, not my company, obviously, but a company I know list on the OTC, and it took them about 40 or 50 grand. So, I mean, the difference is I think you have an OTC listing as well, so you'd know.
We do.
Yeah.
Yeah.
Yeah. You also listed in Germany, if I'm not mistaken.
Yes,
On
but
the
which
front.
was kind of a freebie, you know, they at least, I don't know if it still works that way, but when you were publicly listed in Canada, you ended up with somehow a German listing as well. So, you know,
Nice.
so it wasn't something we actively sought out. It just sort of happened, you know, as part of our listing. You were also listed in Germany as well.
Yeah. There's a decent German audience actually watching this.
There really is.
I don't know how many people pay attention to uranium in Germany, but well, they should. So that's
Well,
a
they used to. I mean, well, I think the investors are still, there's a great investor pool in Germany and all Europe, I think in general, but Germans are really quite comfortable in the nuclear sector. And, you know, they were such a powerhouse in the overall nuclear business, you know, going back a couple of decades, or say 3 decades ago when I was first starting off in the business. German utilities were prevalent in all of the major projects in the Athabasca Basin. So, you know, I think there's, you know, a lot of investor savvy in Germany as well. So, yeah, I never discount their ability to, you know, to stay informed and be involved in certainly on the investment side of the nuclear business. You know, I think we see good appetite over there.
Do you still think you're gonna have to do a rollback though to get listed on in the US?
There would be, you know, if the share price is where it's at right now, there certainly would be, you know, a need for a rollback because you have to maintain a certain price target, and that would be, you know, about 2 or 3 times well, maybe 3 or 4 times the size of where, you know, the price of where we're at right now. So you'd be looking at trying to maintain over a $2 price target. So.
Right. Okay. But if it weren't,
so yeah, I think a rollback would be necessary if we were to go forward on a U.S. listing.
right. But if it weren't for the price, you wouldn't do it, or would you still? Because I mean, the number of shares is just getting. I mean, it's getting up there. What is it? Almost 800 million now. So, do you want to do it anyways?
It would. Well, I wouldn't do it anyways. If I would only do a rollback if it was reason driven, and the reason for us would be because we were stepping into a new market and doing you know, a cross trading with a major exchange in the U.S. That would be the rationale for doing a rollback. So quite a different rationale than why, say, most juniors do a rollback. They do it because they're trying to, you know, increase the price from a couple of pennies to 10 cents or something like that, right? You know, it's a bit more price driven from that perspective, but for us, it's really would be an event driven rationale. Like the company's well market capitalized. We've got, you know, a great deal of the treasury is very healthy right now. It would really be based because of the need for maintaining a certain price target on a U.S. listing.
Okay, that's something for this summer, though. I assume something in sort of a 6 to 10 months range.
Yeah, somewhere 6 a month range, I think, is reasonable.
Okay, good. Well, then, but you're basically going to have some news every month, or give or take every month this year.
Well, we're going to have exploration news. I would say every month, certainly. Yeah, right up to the first half of the year. Well, you know, there'll be, I think, significant new milestone stories to be told on the development side as well on permitting. As I said, our plans are to submit our environmental impact statement to the Saskatchewan government in Q1 of this year. So, you know, I guess probably targeting February for that submittal, but that'll certainly be newsworthy. And whether we have agreements in place, if we can achieve impact benefit agreements with our local Indigenous partners in the area, you know, those would certainly be newsworthy events as well. So, and I think as we continue to progress through the front end engineering and the detailed engineering, you know, we'll be providing updates to the market there too. So, you know, that and the corporate information that we already discussed, I think there's a whole lot of news to be coming out of Fission in 2024.
I'll be following along. I'll be here to do interviews. I think I'm all out of questions though for now. What am I missing? What did you come here hoping to talk about, but I'm failing to bring up?
I don't know if you're failing anything. I think we've covered quite a bit on the company and the project, but I think, it's important, the whole nuclear sector. I mean, obviously your audience has been following uranium. It's now over, at end of the year, over $90 a pound and continues to tick up in the first week of January. I think we're something about $92 a pound currently this week. So, we've long predicted that the price will continue to move up. And I think the last time we talked, I'm not sure where the price was, but it was probably in the $60 range, and it's up significantly from where it was in the last half of the year. But I think it's it doesn't seem to be slowing down anytime soon. So I think the nuclear sector is really well positioned for companies like ourselves to be able to take advantage of these rising uranium prices and garner a lot more attention in for the next level of development, such as Fission and the PLS project. So no, I think we covered a good deal of ground, but and happy to give you further updates as we move along through the year.
All right. Well, thank you so much for sitting down with me.
Yeah, Antonio, it's a pleasure.
All right, that's it for this week. For next week, I have 3 different metals plans, or companies that are active in 3 different metals. We're going back to Peru, and we're talking to Silver X. I'm not technically going back to Peru. I'm lying. But I suppose you can guess Silver X is a silver company, and they actually have a producing asset as well as some exploration assets. All of them are in Peru. But I'm talking to them from my spare bedroom, not from Peru. I have an aspiring tin producer for next week as well, with that being Cornish Metals, with assets in the UK. And I also have a gold developer in the face of Lumina Gold, which holds the largest undeveloped gold deposit in Ecuador. At least that's what it says on their website, but I'm hoping to find out more about it next week. If you have any questions for them, though, head over to resourcetalks.com, where you can submit those questions for free under the tab questions, which is kind of obvious, I suppose. And I hate to sound like the Gen Z YouTuber that I am, but you can subscribe to this YouTube channel for free as well by clicking the subscribe button. I don't know which color it is nowadays, but it probably says subscribe on it. And if you select the bell icon that pops up next to it after you subscribe, you're also going to be notified when that video is released. So this is basically sort of a free distribution list if you want to be kept up to date, or don't if you don't care about that. In both ways, I thank you for investing your time in me, or for letting the computer speak in the background while you're doing the dishes, all of which is appreciated. Thank you so much, and you have a great week.